Pursuant to the order of reference of Tuesday, March 24, the committee is meeting on the government's response to the COVID-19 pandemic. We are really meeting for the purpose of receiving evidence concerning matters related to the response on the COVID-19 pandemic, and to consider a bi-weekly report to be provided by the Minister of Finance or his delegate on all actions undertaken pursuant to Parts 3, 8, and 18 of the COVID-19 Emergency Act. Today's meeting is taking place, as you're well aware, by video conference, and the proceedings will be made available via the House of Commons website. So you are aware the website will always show the person speaking rather than the entirety of the committee. In order to make the work of our interpreters easier, I would ask people to speak slowly and as clearly as they can, and for those that are not on to mute their phones. And before speaking, just wait till the chair calls you. I do have the speaking order here. So with that, we will start the meeting officially, and I believe we will start with the Governor of the Bank of Canada, Stephen Poloz. And Governor, I want to thank you, first of all, on behalf of the committee for all the work you, the Senior Deputy Governor, your board, and all the folks in the Bank of Canada are doing these days to assist Canadians in getting through this crisis. So we'll turn the floor over to you and then go to a round of questions. Governor.
Well, good afternoon, Mr. Chairman and committee members. Senior Deputy Governor Wilkins and I welcome this opportunity to appear before you to discuss the bank's policy actions in response to the coronavirus pandemic, as well as our monetary policy report, which we published just yesterday. The
Canadian economy is experiencing a significant and rapid contraction. The shock is a global one, affecting all countries. But commodity-producing countries like Canada are being hit twice. Beyond the impact of the necessary public health measures to contain the virus, the economy is also being hurt by the plunge in world oil prices. In the very near term, policymakers can do little more than cushion the blow.
Our mandate of keeping inflation close to target, the economy first needs to be stabilized. In recent weeks, Governing Council lowered our policy interest rate 3 times to 0.25%, which we consider to be its effective lower bound. These moves were based on analysis of the factors that we could measure immediately, mainly the likely fallout on the economy from the collapse in oil prices, as well as the immediate effects of measures to contain the coronavirus. This preliminary analysis indicated that cutting rates all the way to the effective lower bound was the best contribution the bank could make to stabilizing the economy, and complementing the government's extensive efforts to respond to the pandemic. However, for the bank's monetary policy actions to reach companies and households and foster a robust recovery, it's crucial that financial markets function well. So the bank has so far taken many steps aimed at improving market functioning. Let me describe these programs and facilities and their intended purpose. The market for Government of Canada bonds is foundational. It forms the basis for many other financial markets. So we launched a program to purchase at least $5 billion of these bonds per week to support the liquidity and the efficiency of this market. In yesterday's announcement, the bank stressed that we can increase this program at any time should conditions warrant it. And we announced that we will increase our participation in the federal government's Treasury bill auctions to 40% of each new issue. The bank is also helping to ensure proper functioning of provincial debt markets by buying up to 40% of new provincial money market securities and up to $50 billion of provincial government bonds. We've taken a number of steps to ensure financial institutions have ample liquidity, so Canadian businesses and households can continue to have access to credit to meet their basic needs and bridge this difficult period. These steps include enhanced repo facilities, which allow banks and other primary dealers to borrow cash from us using their assets as collateral in order to help them better manage their liquidity risks. We've expanded the list of institutions that can access our lending, as well as the types of collateral that they can pledge. And these facilities can now provide funding for up to 24 months. We've started also a contingent term repo facility, which offers liquidity to a broader range of counterparties that are active in the repo market. Further, we've established a program to buy Canada mortgage bonds, up to $500 million per week. This is to support the healthy functioning of an important market for mortgage lending to Canadians. Together, all these facilities should improve liquidity and funding conditions for lenders, which will help companies and households have access to the credit they need. It will also help them benefit more from our monetary stimulus during the recovery period. To support Canadian businesses, we started a program to buy bankers' acceptances, which are a key source of financing for many small and medium-sized companies. We also began the commercial paper purchase program, which provides financing for a wide range of businesses and public authorities. And yesterday, we announced a program to buy $10 billion of high-quality corporate bonds in the secondary market. As we said in our policy announcement yesterday, the bank stands ready to augment the scale of any of its programs, should market conditions warrant it. With these programs in place, the combination of aggressive fiscal action by governments and monetary stimulus by the bank will create the best possible foundation for the recovery period. It's the normal practice for the bank to provide a detailed economic forecast for the Canadian economy in our MPR, and for us to discuss this forecast when we appear before this committee. However, the economic outlook is highly conditional on how long the containment measures remain in place and how households and businesses adapt. Given this, the bank decided that it would be false precision to offer a specific forecast in our MPR. Instead, we chose to offer two plausible illustrative scenarios for the economy. One of these should be thought of as a best case, which remains feasible depending on the length of the shutdown and other factors, while the other is a much more severe scenario, and many possible outcomes lie between these two. Regardless of the outcome, based on the bank's analysis, we concluded that substantial monetary stimulus needs to be in place to lay the foundation for the post-containment economic recovery. Je tiens à mentionner que tout.
I want to stress that all of our actions so far have been entirely consistent with our inflation targeting framework as set out in the agreement with the federal government. Inflation targets provide an anchor for the economy, particularly inflation expectations, and a guide for policy actions. Keeping inflation close to our 2% target means setting monetary policy to stabilize the economy and returning economic growth and employment back to full capacity.
That this is the last time that I'm scheduled to appear before this committee as Governor of the Bank of Canada. These appearances are an important part of the bank's accountability to Canadians, and I've always appreciated these occasions to explain our work to you and through you to the public. And I thank you for your work in this regard. And with that, Senior Deputy Governor Wilkins and I would be happy to take your questions.
your efforts and your work over the last years as well. So we will turn to MPs for questioning, and I'll just give you the order first. First on the 6-minute rounds will be Mr. Polyev, then Ms. Zerowitz, then Mr. St. Marie, and then Mr. Julian. So, Mr. Polyev, the floor is yours. Just check your mic, Pierre. You may be muted. There.
Thank you. Thank you. As you just restated, Governor, your bank is buying $5 billion a week of Government of Canada bonds and buying 40% of new Government of Canada treasuries. You said in your monetary policy report this was because of strains the government was experiencing in raising new money and challenges in borrowing. If the government's balance sheet is really as strong as you and others have claimed, why can't the government go on borrowing from willing lenders rather than having you create money from thin air to lend to it?
Okay, so first of all, when we refer often to this notion of strains, and the strains in the marketplace that we refer to are the actual functioning of the market. That pertains to the actual liquidity in the market. Can you sell a bond readily when you want the cash, or do you find there's quite a spread between bid and offer prices? And that's a sure sign that a market is being disrupted. When bid-offer spreads widen out, it makes it very hard for example, mutual funds that are running bond funds to rebalance their portfolio, or for any investor who chooses to have cash instead of their bond to sell that, or for that matter, for the borrower, such as the government, to raise cash in the market when the market's not functioning as well as it should. So when there is increased liquidity demands, the most liquid assets that we have are Government of Canada securities, and they're the places that people turn in order to raise cash. And so the market tends to get these strains. So I wasn't referring then to any issues at all about raising government money. What we did say yesterday was that given the cash needs that we see emerging in the near term, this is very likely to produce additional strains in the market. This is just a digestion effect. I don't see this as a credit issue.
Right, but perhaps the spread between bid and offer is due to the fact that the market is demanding a premium in the rate that it gets from government securities, taking into account the risk the market sees in making those loans. And you did say in your monetary policy remarks that there were challenges for the government in seeking borrowing. That I have the remarks right here. Yes. And it just does seem a little bit strange that you have to pump this enormous amount of money into federal government bonds. You're now helping at a rate of $250 billion a year annualized in bonds alone. And that doesn't include the 40% of the treasuries that you're buying, all of which suggests that the government cannot raise money on international lending markets at rates that it considers acceptable. And that's why you by definition are creating it. If they could, they wouldn't need to come to you. So I just respectfully challenge the notion that you and others have put forward that governments can continue to borrow at this rate and at the rates that they have been without any consequences. And I turn the committee's attention to the overall indebtedness of Canada, because the economy has to support household, corporate, and government debt. So the question to you then is, how much debt do Canadian households, governments, and businesses owe combined?
That's the question. Well, that's we would normally measure that in terms of ratio to GDP, which we know for the household sector is around 100 give or take. I'm gonna have to get the exact facts to you, but off the top of my head, it's approximately 100% of GDP. It's like 170% of disposable income. That's usually the metric that we refer to from a household sector point of view. The corporate sector, I don't have that on the top of my head. And then the government of Canada is about 30% of GDP, as we know. And provinces are larger than this as a share of GDP. So
the combined indebtedness of Canadians is multiples of our entire the entire size of our Canadian economy. Another good reason we should reject the notion that we can just keep borrowing and borrowing. Eventually, our economy will not be able to support the abundance of debt that is being piled up here. Now, moving to provincial debt, to which provincial governments have you had to come to the rescue so far, or do you expect to have to come to the rescue in the immediate future?
And Governor, you didn't quite complete your last answer there. If you want to take the time to finish the answer, do so.
I'm not sure out of all of these that we have not come to the rescue of any provinces. We have been buying short-term securities from the market, directly as the provinces have been issuing, as a form to add extra liquidity to the system. As I was saying before, the strains that we're looking at are not strains related to borrower strain. The strains are that across the entire network or the entire system, everybody is, in times like this, goes to more liquid positions. That's when they're selling their stocks, when they're selling their bonds, when they're adjusting their positions, just when they're drawing their credit lines. A firm that has a committed credit line with their bank several weeks ago would see the trouble coming and drew their credit line right to the maximum and then just parked the money. Well, the banks have to fund that in some way. They don't just pull it out of their vault or their deposits. What they do is they go to the market to fund that. And those markets were jammed up because of so many people throughout the economy, and I'm talking about people acquiring additional liquidity. And so it's the central bank's job in that situation to provide those needs. And the way we do that is by acquiring the assets, the illiquid or relatively illiquid assets that the market is providing up. And so our balance sheet expands at that time, which is what central banks do. And then at a future time when those tensions ease back, no one will need the liquidity. The firm that drew its entire $100 million credit line will put the money back, pay back that credit line. Then the bank will have all that money to put back out into the market. And that's when those assets get reabsorbed. This is how a liquidity provision takes place.
Okay, thank you both, and thank you for that explanation, Governor. And we will turn to Ms. Zerowitz and then on to Mr. St. Marie. Ms. Zerowitz.
Thank you so much. I hope everybody can hear me. I just want to say a huge thank you to the Senior Deputy Governor Wilkins and to you, Governor Polos, for presenting to us today. As this is, as you mentioned, the last time before our committee, I want to thank you for your extraordinary service to Canada, and I want to thank you for your leadership during this pandemic. Governor, over the course of the last month, you've taken some very significant measures to ensure that the financial markets in Canada continue to function and that credit remains available. I know you've adjusted the overnight rate a number of times and that you've introduced a number of programs to increase liquidity in core funding markets, and you've taken us through that today in your presentation. Yesterday, as you mentioned, you did present your monetary policy report as well as you announced some additional support. So in my riding of Davenport, they're like many constituents or most constituents across the country. They're worried, they're stressed during this pandemic, and they're wondering whether life will ever go back to normal. So my question to you is, what should our constituents think about your announcements? What signal are you sending to them? What are you trying to say to them?
Well, I mean, the narrative, of course, is you're right. It is every good reason for people to be concerned. And our job is to do everything we can so that they needn't be. But I'm going to ask Ms. Wilkins to walk you through our economic scenarios in just a moment. But let me just say that the comparisons that people are making to past episodes are actually, in most cases, quite unhelpful. This is a very unusual thing. It's closest, I think, to a natural disaster. And what we are doing with our policies is finding various ways, essentially, to stop the clock so that we can wait out the pandemic and then restart the clock. Mm-hmm. And what happens is, in the interim, especially fiscal actions put a floor underneath people so that they're supported through that period, so they have a bridge to normalcy, and that forms the platform for the recovery afterwards. Mm-hmm. And so people should be reassured that we're using all the tools in our toolkit in order to provide this transition. Carolyn, would you like just to talk briefly about the scenario? We don't have a forecast, but a scenario to explain how it comes together dynamically.
Sure. Thank you, Governor, and thank you for the question. So there's a lot of unknowns about how the recovery, when it comes, will unfold. And certainly the fact that we started into this in a reasonably good position with the unemployment rate relatively low and the economy was starting to strengthen again after some weakness in the fall. The banks are in excellent shape. We see that there's every reason to believe that a recovery could be starting over the summer once and if the containment measures are starting to be lifted slowly, and that would continue into the fall. Now, of course, that all depends on the timing of the containment measures. But in one of our scenarios, we assume that starts to happen in May and June. And what your constituencies will see and people across the country will start to see is that those businesses that were deemed non-essential will start to open. And not all of them will, but many of them will. And people will start going back to their jobs or be rehired, and their hours will become longer. And that will create what I would call a virtuous circle that will underpin confidence. And as the governor said, the programs that are being put in place today by the government, for example, the wage subsidy or help for paying rents and other things, are really designed to put a floor under that confidence. So then when things start to open, that we can start to get back to normal. And our programs that we put in place to shore up liquidity and credit may seem very remote to people in your contingency, but in fact they're just essential, because it means that if they need their line of credit or they need to be they need to have some forgiveness on their mortgage payments, that the banks are in a position to be able to do that. It's not guaranteed, but at least they're in a position. And so I just like to just finish by saying that the one thing that we should note is that there has been also a large drop in oil prices, which means that part of the recovery might take longer depending on what happens to oil prices. We think a lot of that is due to the COVID virus, and those prices should firm up. But over time, but with inventories as high as they are, that could take a bit longer.
Fairly quick question, if you could, Julie. You only got about a minute total.
Okay, thank you so much. This is in response to, I think, that some of the, Mr. Poilievre was mentioning sort of the debt levels in Canada. And I know, Governor, that you are in touch with G7 countries as well. Can you relay to us how our economy is doing and functioning versus other economies as we're all going through this pandemic? Can you give us an idea about that?
Well, we have very little by way of data on how economies are faring yet, but they all seem to be faring kind of similarly in terms of how much of a shutdown is happening and what it does to the economy. However, not every government has the same amount of firepower available, I would say. So that varies a bit from country to country. And certainly in our case, as Ms. Wilkins just mentioned, we started this whole episode with our economy operating full employment at capacity and inflation on target, which was not something that's shared by many other countries. So it's like, a person who's healthy and fit has a better chance of shaking off the COVID virus. So does a healthy, fit economy. To have a better, more resilience as we go forward. And so, in that sense, at a minimum, the federal debt to GDP ratio is quite low, among the lowest. And so I think that we walked into this with that sense that we knew fiscal policy would be able to rise to the occasion. We knowing full well that monetary policy had very little ammunition at its disposal.
Thank you.
Okay.
Thank you so much.
Thank you. Thank you all. We'll turn next to Mr. St. Marie, then Mr. Julian, and then Mr. Kelly. Gabriel, you're up.
Oui, merci, Monsieur le Président.
Thank you, Mr. Chair. Madam Wilkins, Mr. Polas, good afternoon. I'd like to thank you for being here today. My first question is on the duration of the introduction of your programs. I'd like to know how the Bank of Canada will ease out of these programs. We need to know what the signals are, what are the indicators. And I would tell you also that we would not want to create any shocks in the system.
Merci beaucoup pour cette question. C'est clair.
Thank you for your question. Obviously, we'll have a look at the same signals that we did to put these programs in place. As for repo, we noticed that there were liquidity problems in the markets in the short term. So we saw this for all kinds of different situations. So we'll be able to see as things progress how things start to go better, and then we can slowly ease off of them. That's what we did in 2008. And it's also the same thing with buybacks. When we look at asset buybacks in the private sector, at some point the market is going to pick up, and we'll see the level of activity increase. As for government bonds, we've already said that we will keep doing this until the recovery is going well. And with experience, we've seen that the recovery should be progressive, because otherwise, as you say, there could be shocks in the market.
Just to interrupt for a sec, Gabriel, I seem to be getting, I don't know about other members, I seem to be getting both Carolyn's voice in French and the English overlaying that together. Can the people in the booth kind of check that out? I seem to be getting both at once. I don't know about other members. Go ahead, Gabriel. Sorry, I won't take your time.
Oui, donc, merci.
Thank you, Ms. Wilkins, for your answer. My next question is on the $200 billion in repo. Yesterday, the government or the governors said that there are $200 billion in new securities. What is it exactly? Is it mostly bonds from Canadian corporations? Are there sectors that are more concerned by this? I'd like to know what these $2 billion in repo are.
Dans les 200 milliards,
For the 200 billion, most of them are repos. There's 140 billion that are repos. The rest is maybe 95% bonds under 1 year, which is normal because the current problem is temporary. But you can see everything will be published on our website, everything we've purchased, and the balance sheet will be transparent. And same for our announcements on our website.
Merci beaucoup.
Thank you. Third question. In an earlier answer to Mr. Poiliev, Mr. Poloz talked about funding to the provinces. So the Bank of Canada is supporting 40% of bonds for provinces. So according to you, how many provinces would not be able to have the necessary funds without that measure? Well, the 40% includes short-term securities, so under 1 year. So they're not province bonds. And we wanted to aim for 40% to be fair with all the provinces. I can't tell what the credit rating for provinces will be in the future, but the program aims to help provinces function. I'm talking about funds for the provinces to do their work. So, of course, this will also help provinces to implement their own programs to help people in their jurisdiction. So what we want is to help conditions in the market. It's not really to help a credit problem within the provinces. Thank you very much. And thank you for answering all of my questions in French. It's much appreciated.
Thank you very much, Gabriel. Turning to Mr. Julian and then on to Mr. Kelly. Mr. Julian.
Thank you very much, Mr. Chair. And I'd like to thank Governor Poloz and Deputy Governor Wilkins for being here today. Thank you so much. We hope that your families are safe and healthy. And thank you, Governor, for your service to our country. We certainly appreciated you coming to Finance Committee regularly over the years. You have spelled out the supports that are going to the banking sector, flexibility on repo facilities, record low overnight rate. Those are a number of other measures that help to support the banking sector. Now, other central banks, like the European Central Bank, the Bank of England, have imposed conditions around those supports, things like ensuring that there are no executive bonuses, dividend payouts, stock buybacks. In Canada, we have yet to see those conditions. And I can tell you, having spoken yesterday with small businesses in my riding, many of them are absolutely up to their neck, very concerned about whether or not they'll be able to get through the next few weeks. We have Canadians that are having difficulty putting food on the table, keeping a roof over their head. At the same time, despite the fact that many credit unions like Van City have reduced their rates to zero, we've seen that Van City on their credit cards, Community Savings on their lines of credit, the banks have not done this. They've been marginal cuts at best in some of their facilities that they offer to people that are in dire straits. And the mortgage deferrals, I've not yet had one person come to me to say that a mortgage deferral has been approved without interest and penalties and fees. So Canadians are struggling. We're not seeing from the banking sector that shared contribution to get through this crisis. And my question is basically this. Has the Bank of Canada had discussions around ensuring that the banks pay their part and ensuring that Canadians get through this crisis with no one and no small business left behind? Should the federal government be using its tools with the banking sector to ensure that they follow best practices, like Van City, like community savings, credit unions that have made significant supports for people in their community. And what would you say to my constituents that are struggling right now and ending up much more deeply in debt because their mortgage deferral comes with penalties and fees and increasing interest on top of interest, so that they are really struggling, will struggle even more coming out of this crisis?
Well, I guess I should begin by just reminding you that regulating the banks is a job for OSFI, and that's not me passing the buck at all. But it's just that I can just say that what OSFI has said to the banks and publicly is that they have not told them they can't pay dividends, but they have asked them not to increase their dividends, which is something that historically they've tended to do, and to stop using their capital for buybacks. So those things have been said by OSFI, and one of the reasons why they've taken that position is that because OSFI had imposed what we call a dynamic stability buffer, extra capital buffer on top of the regular capital requirements in advance during what we call the good times of roughly 2 percentage points. I think it was going to be 2.25% by now. And so what happens then is that by saying to them, it's okay, we can reduce that buffer now, that has the same effect on the economy as if you're in a different economy without a buffer and they say, let's not have any dividends. What it does is it keeps capital in the bank and allows it then to be used to expand lending if that is what's the demand. And as I've described before, we had a tremendous amount of drawdowns by companies drawing their credit lines in the early days of this period. And so this move by OSFI helped that situation quite a lot because the banks can satisfy their requirements at a slightly lower level. And so we have at least been operating in the same way. It's just that we had an additional tool there. It's not a tool that the Bank of Canada manages, but it's OSFI's tool. And you'll recall perhaps the day when the superintendent and I appeared with the minister to describe that basket of changes that happened all at once. So as for the other items you raise, I mean, the banks, we shouldn't. I'm not going to, be the defense for the banks. Just say that the banks have been important conduits for the policies that have been enacted, the additional lending policies that have been put in place. The banks are running those programs on behalf, essentially, of the government because they're the ones connected with the clients. They have a lot of risk already, of course, in the existing loan book. We shouldn't forget this, that in such crises, there will be strains in the credit in their books. And so that, of course, is also something to take into account. As for loan deferral, mortgage deferrals and reduction in credit card rates, that is somebody else's province. I'm glad to see the flexibility that they have put out there, because I think that is at least meaning that in this deepest downturn in the economy, that's an important buffering mechanism.
Okay, we are at a time on that one, Peter, but you will get a second round after the next 4 questions, so we will be able to get back to you. Turning then to Pat Kelly, we're into 5-minute rounds, give or take a little. Pat Kelly and then Mr. Fragascatis.
Thank you, Mr. Chair. Governor, what is the dollar value of purchases under the Government of Canada bond purchase program so far?
I'm going to turn to Ms. Wilkins, who I think has brought those numbers with her. We committed to $5 billion per week. It's only been 3 weeks, I think. Carolyn, go.
Go ahead, Carol.
So it would be about 15. Would be about 15.
Okay. Well,
15 billion, I guess.
So
I'll check that number. It changes every day.
Okay, what is the dollar value of purchases under the provincial bond purchase program and purchases made under the 40% absorption of new debt issue?
So on the provincial bond purchase program, there have been no purchases to date. We just announced that program, and so we're finding an asset manager and developing the program, and it should be ready to start purchases in 3 or 4 weeks. On the provincial money market program, which is where we purchased the T-bills for 1 year and less, the purchases are about $2.3 billion.
$2.3 billion.
How many different provinces does that account for?
It would include all of them who have come to us, who have been issuing. It's a weekly. We would purchase 40% of their T-bill issuance of every province on a weekly basis. So one province per week.
Okay, so this is automatically for every province. This is not something that you're determining or capacity of any particular province. So
no, and that's important. Just sorry to interrupt. That's important because that's what shows you that this is meant for market functioning in general and not targeting any particular province.
Okay. What's the dollar value then in new currency created to date under these various programs in total?
Well, it would be nearly 200 billion.
So the question, you frame it in such a way, the demand for currency or banknotes has not really changed significantly, and so we haven't created anything more than we normally do. But what has happened is that we have created what we call settlement balances, which is what we call liquidity. It's cash that's available to the system. So in order for us to create it, we acquire the assets. So our balance sheet still balances. That's all that's going on. So when we acquire a Government of Canada bond, then we're crediting the system account with that much by settlement balances. So we literally call it liquidity because that's what it is. It is not cash in your pocket though.
So, okay. You said that you believe that all of these measures that you have announced so far fall within your inflation targets and that there will be no effect on inflation by these programs. Did I understand that correctly?
Yeah. So I think the best way to think of this as a complete scenario is to think about what would happen if we didn't do it. If we didn't do it, the system would be starved for liquidity and credit lines would be cut. So those companies wouldn't have been able to draw them. We could have seen, people would have maybe their credit limits reduced. So in other words, there would be what we call a credit crunch. And that would be a disinflationary effect on the economy. So by creating the additional liquidity, we satisfy that need and prevent that from becoming a disinflationary problem. So I know that if we were starting with normal times and we did all these things, then you'd be thinking, well, that looks like it could be inflationary. Well, it is exactly the same operation that you would do if you were trying to be inflationary. But you're doing it in order to counterbalance this disinflationary effect that would occur if we didn't do it. So we are what Ms. Wilkins was saying, that if we're to achieve our inflation target, our first order of business is to stabilize the economy and then get it growing again so we get back to full employment and then we're back to where we were before. So those are the steps along the way.
Thank you. Over what time period do you expect to be able to return these assets you've purchased back into the market? Is this starting in a year, or will this be decades?
No, as Ms. Wilkins said, the vast majority of the operations that we have done so far are short-term operations. And so they would just roll off the book as they matured and whoever was borrowing then would borrow in the market because the market was back to normal rhythm, less tension.
Thank you.
I'm sorry.
Go ahead. Sorry,
Chair,
Stephen, go ahead.
If I can just finish that sentence. Frankly, it will depend on conditions, and we expect those conditions. This is a temporary disturbance, so later this year, some of that unwinding will already be happening. Some of it may be longer term, but for the most part, it's going to be whenever the economy is getting back to normal, then markets will be back to normal, and that's how the rollout will happen.
Okay, thank you all, and we'll turn to Mr. Fragiskatis and then on to Mr. Cumming. Peter.
Thank you, Mr. Chair. Thank you to you both. Governor, I want to ask you about the overall health of the global banking system, specifically relating to loans and debt repayment. Just a few days ago, the International Monetary Fund issued the following statement, quote, "The resilience of banks may be tested in the face of a sharp slowdown in economic activity that may turn out to be more severe and more lengthy than currently anticipated. As firms become distressed and default rates climb higher, credit markets may come to a sudden stop, especially in risky segments like high yield, leveraged loan, and private debt markets." In addition to the IMF, the Economist magazine, Governor, has written very recently that there's deep concerns about the stability of the European banking system, particularly because of the concern around loans and debt repayment, mentioning in particular Deutsche Bank, and beyond that, beyond Europe, Chinese banks. So my question is, what are your thoughts on these perspectives and the stability of the global banking system, and what might that imply for Canada going forward in the months ahead?
Well, thank you. So we've had a persistent narrative around the global financial system and the Canadian financial system, mostly focused on our FSR, which, as you know, is once a year, and actually is coming up about 4 weeks from now. We'll be before the public with our updates on that. But as in the broad sweep of your question, what we can say is that the global financial system is in far better shape, much more resilient place than it was at the time of the global financial crisis. There was substantial good work done through the Basel process, the Basel III reforms. And the reason that took so long was because it was global and everybody had to adhere to an agreed higher standard. And so the IMF itself does regular stress tests of the financial system in order to reassure us that the things are working as planned. And those stress tests normally take the form of a combination of the biggest recession that the country has ever faced. We usually use the 1981-82 recession as the model. A bigger increase in unemployment than happened then. And on ours, they also used a 30% decline in house prices just to add even more stress on the banking system. And so, of course, we're most familiar with our own results, but they do this for the whole community. And so what we find is that the banking systems are well positioned to absorb a shock of that magnitude. And that's normally something that lasts quite some time. That's a long, extended recession. So I'm not saying that means that this is a very unique situation. And of course, it's different in some ways. It's much deeper, sharper, and we believe much short-lived compared to what I've just described. And so I'm not going to dismiss those risks because they are important. But I feel very confident in the resilience of the financial system as it stands today. And I think the proof is what you're seeing, that you're not hearing about firms being cut off from their credit, which we heard a lot of back in 2008. So what actually we're seeing is in China, for example, we're just hearing this morning, we had the IMF meeting, and what we're hearing is credit is expanding. in China. That's another sign of the recovery starting to take hold there, and a sign that even though there are risks we will point to, their financial system is performing as normal. So I'd like to reassure you, without taking it off the table, I agree that this is an important consideration, and it's something we study a lot, and we'll say a lot more about it in May. About 4 weeks from now is when that report will be ready.
Thank you. 1 minute. Thank you very much, Governor. And I put the question simply because, relatively speaking, certainly Canadian banks are quite stable, but we do obviously operate in an international context. Seeing as though I think I have 45 seconds and I want to stay on the good side of our chair, I just want to ask you, Governor, certainly the bank is not distant. It has taken an active role, arguably the most active role it has seen for itself in Canadian history. But for many Canadians, federal institutions can seem distant. Do you have a message for everyday Canadians about the approach that the bank is taking and how the bank's actions are having an impact on their lives? What is the focus in terms of making sure that people's lives are stable and secure? How does the central bank go forward with that in mind?
Well, I know that the programs we describe can sound exotic and arcane and so on. I think it's easier to think of it as much more like plumbing, which when it's working fine, it doesn't really attract your attention. It's when it doesn't that, of course, we have the problems. And so what we're really playing a complementary role. The star in this is the fiscal approach to buffering the shock for people. But for us, it's making sure that we're using all our tools to ensure that those things can get to people, ordinary people, so that they can renew their mortgage, so that they can buy a house when the recovery is underway, et cetera. That's what we're aiming our efforts at. And so if they don't really see us, it's probably a good thing.
Okay, thank you both. That was a great description, Stephen. Turning then to Mr. Cumming and then on to Sean Fraser. Mr. Cumming.
Well, thank you, Chair, and thank you for appearing today. A couple of things that I wanted to be able to touch on. One was your earlier comments talked about even prior COVID that there are strains in the economy with the commodity prices, and specifically in the resource sector. How important is that sector to the recovery as you see it of the economy?
Well, I see it as very important, and so I think that whenever there's a global shock, as I said in my introductory remarks, a global shock like this, we of course feel the shock just like everybody else. But then since we're a major commodity exporter, we feel a second shock because the prices go down too, and that's like an income cut for the entire economy. So one of the things I've tried to make clear is that just on the basis of the drop in commodity prices alone, I would say we would have cut interest rates at least by 100 basis points, such as what we did in 2015, because it's not unlike what we saw in late 2014, early 2015. Possibly we would have ended up doing all 150 basis points if that were the only shock that we were facing. And so that is a very real shock for the economy. It will work through it in its usual way. And of course, it has regional implications. It's not all spread across the entire economy. The secondary effects of it are, okay, when we say about Alberta and Saskatchewan experience the effects of lower oil prices, when everybody who's affected spends less money, that lower spending affects the rest of the entire economy. We've seen that over and over. This is one of the things that sets Canada apart from, say, the United States. They don't see it nearly to the same extent as we do. So it's crucial. And so we do think that the oil sector could recover a bit more slowly because of the buildup of inventories. That means prices have fallen and they may take longer to get back up to a more reasonable level. but it's a very hard forecast to make at this stage. There's a lot going on in that market, and so I would just like to see how it turns out for now.
I want to talk a little bit about this corporate bond buy. So $10 billion in corporate bonds so far, and it could be more. There's a risk that you might overpay for those assets and the bondholders will profit from that acquisition. Would you welcome the Auditor General to audit to ensure that you didn't overpay for those assets?
Carolyn, would you like to take that question?
So just first on the program itself, we do have the intent to have a very well-respected and experienced set of people providing those purchases or doing those purchases with the operational capacity and the robustness of the experience to do that. And so that's in my mind the very first line of defense, along with our other risk mitigations there. Under our act, we do have provision for the governor and council to appoint 2 firms of accountants to audit the affairs of the bank, and that's stated in our act. And we do have an annual report where the auditor's report is put in and it's submitted to the Minister of Finance as well. And for 2019, just as a point of reference, our auditors were PricewaterhouseCoopers and KPMG.
And then, Chair, do I have a little more time? Thank you. I want to go back to a comment earlier about the extension of credit and companies building up their operating lines post-crisis or just after the crisis. And the term "park the money." What evidence would there be of? To me, park the money means it's money available, but that may not necessarily be the case. That if they fully extended their lines, they may be tapped on their lines. Where does that comment come from? Park the money. That would indicate that they have set aside money for liquidity, and I'm concerned that may not necessarily be the case.
Well, I use the expression because the evidence we had was that this is anecdotal, obviously. The companies were drawing their lines to their maximum, even though they didn't need it for their current cash needs. This was just because probably they remembered back to 2008 when we actually had a credit crunch and some of those lines were cut back before they were able to tap them in completion. So what I understand in our discussions over the past few days is that activity has calmed down, that the line draws have slowed right down, and in fact, some companies have begun to pay back some of their lines. And this is just another symptom that our policies have had the desired effect, restoring liquid conditions in the market and making people feel more confident that if they need to, let's say, issue corporate commercial paper sometime next week, that it will succeed. Therefore, they don't need their credit line to be full with cash on hand if they know they can do their regular commercial paper issuance. Whereas if the commercial paper market were frozen up, they would need to draw their line to satisfy their basic cash needs. So,
okay. Go ahead.
Yeah, so it's no more complicated than that, really. It's just parking it just meant you keep it in your checking account so that you can use it for your day-to-day needs. But if you've got extra that you don't need to, then you're going to put it back into the system and not pay interest on it.
Okay, thank you both very much. We'll turn now to Mr. Fraser and then on to Mr. St. Marie. Sean?
Thank you, Mr. Chair, and thank you to the Governor for joining us for your service over the past number of years and particularly the past number of weeks. Mr. Chair, cut me off with a minute or two to go. I'm going to yield a bit of my time to our colleague from the Saanich Gulf Islands, if possible.
We will look, Sean, don't want to interrupt you, but we've got lots of time. Take your full time, and I'll put Elizabeth on at the end.
Okay, thank you. Mr. Governor, I've got essentially two questions for you. The first really builds upon a comment you made during your remarks where you suggested it's important to put a floor beneath people, and you indicated that one of the features that may separate the current public health and economic challenge before us as being distinct from those prior, and that this might actually be short-lived given the nature of the threat that's underlying the economic challenge. I'm curious if you think the fiscal measures that what you described as being sort of the star in this episode are going to be sufficient to essentially float the households and small and medium-sized businesses that are facing such a crunch, to help them get through this hopefully relatively short period, so we can bounce back more quickly than both previous recessions and frankly international comparators.
Well, yes. I mean, I have quite a lot of confidence in that. So to begin, when this began, we realized that some of the most vulnerable folks out there would be those in the rapidly expanding, what we call the gig economy. The economy where it's all part-time work and that sort of thing. And I actually didn't know how big it had become. I knew there were millions, but I didn't realize it would be 6 million individuals not covered by the standard EI system. That's a very vulnerable position to be in. And of course, they're also in the sectors most likely to be impacted right away. And so the creation of that program to ensure that those folks would have some basic income to get through this period was a very rapid response, in which I was impressed to see, and its delivery, very quick. So that's number one. The other thing is that's particularly attractive is that program is what I call elastic. So if the shock turns out to be twice as big as we first thought, well, there will be twice as many people drawing that money. If it's half as big, well, there'll be half as many. So it's that elasticity makes it like an automatic stabilizer, like the way economists think of it. That's a very positive attribute. You don't have to go back and, I need some more money, so I have to do something bigger. It'll automatically become bigger if it needs to be. And the third thing is the wage subsidy, which of course is a direct channel. The very desirable feature there is that it maintains the connection between employer and employee. This, I think, will be very important to consumer confidence for that platform you're talking about in the recovery period. First of all, I know I have a job because I'm going to get called back. But secondly, the employer is not scrambling around trying to restart, looking for people to refill those positions. That's just another sort of bit of friction, which is avoided by having that kind of system. So I think that does place us really well. That doesn't mean we're that distinct. Other countries did it similarly, like Japan did it before we did, and Italy did a similar program. So we're learning things. That's what the international conversations are about, I think.
One of the themes I found fascinating during your remarks was the fact that we're essentially introducing, or I shouldn't say we, I should say the bank is introducing essentially inflationary policy to combat the disinflationary consequences that we would see without intervention. I'm curious if you've actually examined or have an opinion on what kind of impact we would have seen if we didn't have such an expeditious fiscal response of this order of magnitude that we're dealing with as well. I know at the beginning of this ordeal, there was a number of people on the public health side saying we need to be willing to look like we've done too much to avoid the worst consequences. And I'm quite happy to look like we've done too much. I'm curious if you've done an examination or have views on what would have happened in the absence of a fiscal intervention of the nature we've seen.
Well, that question probably is best saved for 2 or 3 months from now, when we actually have some data on how the economy has behaved through this. But we do know the sort of dollar amounts. We have, from the PBO and so on, we have ideas of how much money is actually flowing in. And let's say it is on the order of 5% of GDP. I'm looking at Ms. Wilkins here to sort of nod that it's something like. So if you're putting 5% of GDP worth into the economy, that means the economy would be, give or take, 4 or 5 percentage points even weaker than what we'll actually get. Another way to look at it is, as we mentioned before, our operations have injected around 10% of Canada's GDP worth of additional liquidity into the system. And that's putting quite a scale on that. That is a lot. And that just shows you, just imagine if you were to take $200 billion or 10% of GDP out of the economy, how much disinflationary effect that would have on the economy. And so what we're doing is offsetting those kinds of forces. We hope as well as possible, won't necessarily be perfect, but in grosso modo, we should be in the right ballpark if markets continue to function as they have.
Excellent, Mr. Chair. Is that my time?
A little over your time, Sean. Thank you.
Okay, thank you.
We will then go to just to tell you where you're at. We will have time for. We'll give Mr. St. Marie and Mr. Julian 4 minutes each. Then we'll go to Mr. Morantz, Ms. Kousakis, and Elizabeth May, and we might have time for a couple of singles. So we'll turn to you, Gabriel.
Oui, merci, Wayne.
Thank you, Wayne. You published an optimistic and a pessimistic scenario, and you said, quote, "I'm reasonably optimistic. The best scenario is still achievable." Éric Desrosiers in Le Devoir this morning said that Statistics Canada came to spoil the picture on Wednesday with the first estimate of withdrawal of the there was an estimate of a 9% decrease. Do you think the best scenario is still achievable? This is a very good question. Those are preliminary figures from Statistics Canada for the first quarter. It's minus 2.6%. By comparison, the other scenario estimates between 1 and 3%. So it's in the same ballpark. It is following a similar trajectory. For the second quarter, which is the most important one, we think the scenario would be minus 15%. For the fourth quarter, it would be minus 30%. I think realistically, it will be somewhere between the two. It depends when the economy will start again. So if the economy gets back on track in May or June, based on this scenario, the optimistic one, if the economy starts again in the second quarter, but for the third quarter, this optimistic scenario is still achievable, in our opinion. but it is impossible to determine that, as the Prime Minister said yesterday. But the pessimistic scenario that we have is a very pessimistic one. This scenario includes bankruptcies, major loss of employment, which would damage confidence levels. If we maintain confidence, recovery will be swift and robust at the third quarter.
Merci beaucoup.
Thank you. To the clerk and the translators, I think both McLeod, or I am anyway, still having problems with both languages. At once we can pick it up, but it's really coming through difficult with both languages in your ear. In any event, we will turn to Mr. Julian and then on to Mr. Morantz.
Thank you very much, Mr. Chair. And so I'd like to come to the bond purchasing program. You talked earlier about the provincial bond purchase program that is in place now. Of course, many municipalities are struggling. We've heard mayors in some parts of the country talking about bankruptcy. So the large municipalities, and often they fund a big part of the public transit that is so vital between cities, including in the Lower Mainland of British Columbia. So the municipal, you do have an ability in the short term to purchase municipal bonds. My first question would be to what extent you see that as a tool that the Bank of Canada can use to support municipalities that are struggling. And secondly, in terms of the corporate bond purchase program, are the major banks eligible for that? And can you let the committee know what the criteria will be around the purchase of corporate bonds? Thank you.
Okay, I'll start and then I'll turn it over to Ms. Wilkins. So just please bear in mind that the purpose of these programs is to help the market function better. It is not to somehow fix the cash needs of a government, whether it's municipal or provincial. The municipal bond market is a relatively small market in Canada, so it's not core to the functioning of markets. And usually those bonds are issued for capital spending, infrastructure spending. And so for immediate cash needs, I think the most likely channel for municipalities is going to be to talk to their province. And as you can tell, we have now an ambitious program put in place to help the provincial bond market deal with those short-term digestion effects. And so, but as for the corporate bond market, Carolyn, just a little bit about how the banks fit in.
Sure. So the first part of your question was, are deposit-taking institutions eligible? And the answer is no, they're not for this program. And the reason is that we've got a number of other programs and made a number of other changes that have given them the liquidity that's helping them to make sure those funds are being channeled to businesses and households. So with respect to the program, it would be senior secured and unsecured debt of highly rated Canadian incorporated institutions. And the cutoff for the rating would be BBB. So that's just above the lowest level of investment grade. What that means is there's an eligible universe of just under 100 billion, and we would commit to taking up as much as, there's a cap of $10 billion on that. Now, there are other belts and suspenders, and the details are going to be worked out, but the eligible maturity would be between 1 and 5 years, so not the longer term debt, the shorter end of the market, but still a nice tenor. And it would also mean that we would have to think about concentration ratios, about how much of any particular issue we would be taking up and holding. So those are the high-level details. When we get the program fully articulated, the full range of details will be made public.
When do you, sorry, Mr. Chair, just a final question.
Yeah, go ahead.
When do you expect to have the program in place?
So at the same timing, we're aiming for exactly the same timing as the provincial bond program. So within, say, 3 or 4 weeks. Now, that would be to actually start purchases. In all likelihood, we would be publishing the full program parameters before that, and we hope that this program will ease some of the strains and improve the functioning in what's a very important market for Canadian companies.
Okay, thank you all. Then we will next go to Mr. Morantz, then Ms. Kotrakis, and then Elizabeth May. And Ms. Goudreau, if you want in at the very end, if you have a question, just give me a thumbs up and I'll let you in. Okay, Marty, you're on.
Thank you, Mr. Chair. And Governor, thank you for your time today. It's been a very interesting conversation. I've got a few areas I want to touch on, but I did have a chance to review your report, which was issued yesterday, and it's quite a sobering read. And there are so many things that jump out from it, but one of the things that jumped out at me was the heading where you talk about the exceptional policy response that the bank and then the government of Canada is engaged in. You list them all, basically, the CERB, the wage subsidy, the bond purchasing, the municipal bond purchasing, all of those things you talk about. I guess my question is, we don't know, because no one's able to say how protracted this situation is going to be and how long we're going to be in this kind of period of suspended animation. And the way I like to think about it, and correct me if I'm wrong, it looks like essentially the government and the bank have put the economy on a form of life support. I guess my question for you is, how long can we keep this up? How long can the Bank of Canada and the government of Canada keep us in this state before things start to go wrong? And what kinds of things could go wrong if it goes on for too long?
Okay, well, I agree. It is sobering. That's for sure. The metaphor of life support, I'm less a fan of. I think of it as stopping the clock. As I said before, we stop the clock, and in as many respects as possible, just let everybody sit back, and then we're just going to restart the clock. And of course, we're going to start it up in a few steps because we can't just do everything overnight. And so that I think is important for us to bear in mind that this is a temporary thing. That's even, we can watch what has happened in China, for example, or we can, if you prefer, we can look at South Korea, or we can look at Italy. There's some cases that are better than others, of course, but they all have a cycle that we go through. So this is not an open-ended situation. Our scenario that we describe as our best case, given where we are today, would have us looking at various places in the economy where they begin to restart in sometime in May, late May probably, and in early June. So not 100% restored, but maybe lots of us will continue to work the way we are now, right? Virtual working and working from home until the testing is very widespread and the confidence builds that we've got things under control. All that to say that the economy should begin restarting before the third quarter starts, and for sure we'll be doing so in the third quarter. So that means we are going to get a V-shaped trajectory, so down very sharply, then of course back up, but not all the way, but sort of a half V, like a cursive V, where it has and then the rest of the cursive V where it curls up at the end. And that's when it takes another maybe a year for the economy to get back to the same path that it was on before all this started. So when we look back at this, we'll say, well, that was a full year, more or less, departure from our previous path. And that will happen if we've done a good job of buttressing confidence and having people ready for that recovery period. And I think the tools that have been deployed have the best chance of doing exactly that.
unmute. Thank you.
Yeah, there you go.
I'm back. Yeah. I just want to circle back to the issue of inflation. I know you've made your argument that essentially all this economic stimulus is really designed to get you back to, I guess, the market equilibrium that you shoot for in your policy around inflation, which is 2%. I can't help but think, I raised this in other meetings back in just after World War I. There was a major recession, a post-World War I recession. Governments in Europe and in North America did a lot of these same things. And we wound up, and I think Weimar Republic in Germany is the best example, with massive hyperinflation. Inflation that was where prices were doubling every day to multiple powers. I'm just wondering why you're so confident that we're not going to, post this horrible situation we're in, have to deal with that. And if we do, what effect could you be forced into utilizing interest rates as a tool to get that back under control? Well,
yes. I mean, that would be a nice problem to have, to be frank. As a consensus among economists, our biggest concern here is that net this will be a disinflationary occurrence. Okay, that the economy will recover slowly enough that there's persistent downward pressure on inflation, and that's why I said it's so important that if we didn't do this, there would be a significant disinflationary force acting on the economy. And if we actually fell into the territory where we had negative inflation for a persistent period of time, this is the part that economists really want to avoid most of all. And that's because when you have existing debt and prices are falling, in real terms, the debt is rising. And your ability to service it is actually falling through time. So that interaction is the kind of interaction which gives you prolonged recessions, or perhaps even that's how the Great Depression unfolded. And so avoiding that means being really aggressive with these kinds of policies that we're talking about today. And I was only half kidding when I said if inflation pressures did start to emerge, that would be a nice problem to have, because that is the one that we know the best how to deal with. And you'll be right, but as those conditions evolved, you'd be saying, it's time for all this to start going back to normal, and back it would go to normal. And yes, interest rates would rise normally in that situation and cool things off to a point where we have the perfect soft landing. That's the dream. That's the dream scenario.
Well, so you do think interest rates could rise after all this is?
Well, yes. When we get back to normal, interest rates will certainly rise. Yes.
Okay. And Mr. Chair, I don't want to be offside. You have one quick one.
No, go ahead. Take one more, Marty. We got time.
I just want to circle back to my home province for a second in Manitoba. Premier Pallister proposed an idea recently, which I think every premier in Canada liked, which was the idea of the federal government essentially being a central borrowing hub to assist provinces, because provinces are borrowing now too to deal with the situation instead of going into the credit marks on their own and paying more. My understanding is you weren't a fan of that idea, and I wonder if you could explain why and whether you might have a change of heart on that one.
Well, what I said at the time, and I guess I still feel that way, is that really is a question for the Minister of Finance, not for the Bank of Canada. If the Government of Canada would like to have some form of borrowing hub for the provinces, that would be a government policy for them to think about. As I've said also, our objective here is to do our best to make sure that markets function very well. And that makes it easier for the provinces to go about doing their normal business, in this case, extraordinary business, because the demands for the immediate term for the cash needs are going to be higher than the market's used to dealing with. So we'll be in the market helping to make that market function well. And so that is not us extending credit to provinces. It's us making sure the market works so that the market can absorb that borrowing as we go through. And by the way, interest rates have fallen a lot. So maybe it's true that provincial spreads have widened a little bit, and they've narrowed a lot since we just announced our program yesterday. But the all-in cost is not high. I mean, the interest rates are extraordinarily low for everybody. And so I don't see this as an expensive period for borrowing. As I said, it's more about market function and making sure that everybody can get their business done. And we'll be there to make sure that happens.
Well, thank you very much.
Thank you.
Thank you, Mr. Chair.
Thank you both, Marty. And as you know, the Minister of Finance is up next. That might be a question you want to raise. And Governor, I'll tell you, I was around in the 1980s and owed a lot of money on the farm. And when interest rates were 22.5%, it was rough. So yes, interest rates are low today. We'll go to Ms. Kotrakis and then over to you, Elizabeth May. Ms. Kotrakis.
Thank you, Mr. Chair. I would like to begin by thanking Mr. Polos.
Oops, can anybody hear?
Can you hear me?
Yes.
There we go. Okay.
Okay. I would like to begin by thanking Mr. Polos and Ms. Wilkins for appearing before the Finance Committee today. I would also like to thank Mr. Polos for his incredible service over the years and wish him continued success for his future challenge. The range of monetary policies announced by the Bank of Canada is astonishing and demonstrates a commitment to ensuring the federal government, as well as provinces, territories, banks, businesses, and individuals across Canada have the resources needed to emerge from this crisis with strength and confidence. The opportunity to discuss the details of these policies with you is incredibly valued to all of us, and thank you for that once again. Mr. Polos, the most recent monetary policy report presents two scenarios outlining how the severity and persistence of the COVID-19 crises may impact the Canadian economy, and we've heard a lot of that through your comments today. The federal government has put forward $107 billion in direct and as part of a potential total of $765 billion package, including liquidity measures to keep the economy going. So I have the following two questions. How does the Bank of Canada's planning and response change in a worst case scenario where we remain in a full or partial lockdown for several months? And should the Bank of Canada and the Government of Canada be planning and preparing for a worst case scenario? And do we still have sufficient fiscal and monetary room to meet the challenge if the current lockdown continues into several more months?
Okay. Well, you want to explore the worst case scenario a bit. So let's talk about that. I mean, first of all, as I've said a couple of times, the centerpiece of the policy response is fiscal. And the most important tools in the fiscal response are what I call elastic tools. They will grow automatically if the shock lasts longer. And so I would think you'd be best putting that question to the finance minister. I know you're meeting with him a bit later. But I would say, I'll put it this way. In terms of the government level of federal government debt and where we sit, around just over 30% of the Canadian economy. Imagine a household that's had a mortgage for some time and they owe 30% of their income on their mortgage. And they say, we've been in this house for 12 years now. Let's put an addition on the back, and then we can have a bigger kitchen, and we'll make it nicer. And so they go to the bank, and they have to borrow about 10% of their income to do this project. So their mortgage goes from 30% of their income to 40% of their income. And then they've got a nicer house, and they do their thing, and a number of years later, they've paid it back. Well, this is roughly the experiment that we were talking about in fiscal space. That it could be as much as, let's say, if it was a bad scenario, 10% of GDP that the federal government needs to borrow and then pay off over a period of time at extraordinarily low interest rates. So I don't think it's much different than what an ordinary household has done at some time in their lives. So in that sort of sense, that's again, from there on, ask the finance minister what he thinks about that. But I'm getting the signal from the chair, but I want to say what the Bank of Canada policy is to provide the kind of market support that can all occur. And if we were in a period, the worst case scenario, as you describe, it would be a very uncertain time, though that tensions that we've been seeing in markets would persist, and we would continue to do our thing. And as I've said to people, those tools can be used essentially without limit in order to sustain that market performance. Those large-scale asset purchases can be a much bigger scale than what we're proposing to do at this point. And if that's what they had to be, that's what they would have to be. And that would give us good market performance. We would get the job done. And then, of course, over time, whatever period of time the fiscal authority decided, we would pay that money back.
Governor, you're too sharp-eyed, Governor. I was given the 1 minute signal to Annie to tell her she had one more question.
Oh, I see.
Fantastic.
Go ahead, Annie.
Great, thank you, Mr. Chair, and thank you for your very thoughtful and very detailed response, Governor. After this crisis is over, is there any way we can regain the 4 or 6% of lost growth that it will cause?
Yes, I think that the number you suggest is not an unreasonable number of how much we could end up losing this year. But what will happen is we're going below capacity, and I think, as I said, we're going to be in a disinflationary zone. And it means that the economy will be able to grow faster than its potential for a while, in order to make up that lost ground, just to get us back in level terms to that full employment place where we were just a few months ago. And so, yes, there's possible that there will be some structural effects to the economy that change that, but there's also arguments for there to being positive structural effects. The kind of innovation that you've seen during this crisis are the sort of things that raise our productivity long term. And so I wouldn't put that as a non-possible thing either. So in the end, I'm quite confident that we will make up that lost ground. But don't hold me to a timeline. It's going to take something that we measure in a couple of years, I would say.
Okay, thank you both. And turning to Elizabeth May, and then to Ms. Goodrow, if you want to get on. Elizabeth, you got about 5 minutes. Go ahead.
Oh, my heavens. I thought I would get one question in. Thank you, Mr. Chair. And again, thank you to colleagues for allowing me a question. I also want to add my thanks to you, Governor Poulos, to your senior deputy governor, Carolyn Wilkins. I don't think any Canadians would doubt that we're being extremely well served by your approach to stabilization of our markets and to make sure we get through this. I was drawn to your analogy that Canada, like looking at us as a country like a human being, what's our immunity going into this? What's our physical strength? That your points that we were at full employment when this hit, that our debt to GDP ratio is pretty healthy at the federal level anyway. And what I wanted to know was looking at other countries around the world. I mean, the financial risks are likely felt just, again, like a human being. There are a lot of economies out there that don't have our internal resilience, don't have the robust balance sheets that Canada has. As this COVID spreads, and I don't think we've seen, obviously, as it makes its way around the world, we haven't yet seen the continent of Africa with the kinds of, the trends, the effect of COVID-19 could be very bad in many economies around the world that we haven't seen yet. So how is the Bank of Canada working in that international context to coordinate with others? I assume you are, to support more vulnerable countries, to enable them to maintain their market confidence and buffer the risks of financial stability in that global context.
Right. Well, the level of international coordination has been quite high. Both the G7 and the G20 have been meeting regularly. And this morning was the big IMF meeting, which is, of course, most of the world. What you see is a lot of commonality across the fiscal reactions, at least the types of tools that are being used. And as I indicated before, I think there's been a high level of sharing. And even though it feels like it's happening all at once, it has been a bit sequential. So you have been able to, talk about things amongst various countries as they've unfolded. Like I remember, it seems like a long time ago, talking to my colleague from Italy as it was just getting underway and having those insights then, which is, compared to Canada's timing, was very far in advance of it. And same thing with South Korea. So I know the governor there very well. And China, we got great insights from the governor of the Central Bank of China along the way before anybody else was really affected. And so that's been great. And certainly the central banks have coordinated even harder than that. And so, frankly, we've been spending almost the entire week and in crazy hours on Skype meeting like we are doing now. But imagine, I started at 6 this morning with my first meeting, and that's just because of the time zones. So I think that we do feel the sense of we're all in this together, and I think it does matter a lot to our outlook. You raise a good point, and that is that it's sequential. Therefore, the recovery also will be sequential. And so, as an important exporter, we know our foreign counterparties will be going through it at different times, and so it's not like we're going to have a simultaneous recovery, and that will affect commodity markets longer term. And that's why I said oil and other commodities might take a little longer to get the full benefits of a recovery.
Fairly quick.
Address your question.
A fairly quick one, Elizabeth. So Marie Helen will have a little time.
I'm just intrigued by your last comments, Governor. If you could shed a little bit of light, what are we learning now from the economies that are sequentially a little ahead of us in terms of how we start and restart our economy post-COVID pandemic?
Yeah, that conversation is really just getting started. Okay, so we talked a bit about that yesterday in the G20 meeting, and but basically what is going on is a lot of consultation with the private sector. So like it almost looks a bit like grand scale industrial planning. Like, okay, so when can you get started and what do you need? And because the supply chains are so complex that there will be fits and starts. And of course, some of your supply chain is not in Canada at all. And so, we may be fortunate in the sense that China was at the beginning, and because that's an important element in most countries' supply chains. For manufacturing, at least, and of course, an important customer for commodities. And so some of that stuff will start to move in the early going. It's very complicated, and we're not ready yet. I know here in Canada, we'll be doing the same thing, creating that kind of consultative structure, and so that everybody can be better informed of, well, what should go first, what can go first, what would prevent it from going first. We need answers to those questions and can only do that by talking to people.
Thank you both. And turning to Ms. Goodrow, the floor is yours.
Merci, Monsieur le Président. Donc, je profite, ma question va être très brève.
Thank you, Chair. My question will be very short. Mr. Polas, you said you were surprised by the number of workers who were not eligible under employment insurance. 5.7 million people, to be more precise. Given that employment insurance is an automatic stabilizer in the Canadian economy, I would like to know, in your opinion, if the economy would not be more stable in a crisis if the system covered more workers. We've known for a long time that automatic stabilizers are not very sensitive to the economy. A past study compared it to changing the interest rate by less than 1%. Concerning the new inflation targets, we're talking in a context where interest rates are very low and there is not a lot of leeway from fiscal authorities to use those levers. Hence the necessity of having more efficient automatic stabilizers. Ms. Watkins is an expert in this area, so she may have some words to add. But it is certainly something that is worth discussing. That's an excellent question. I think Mr. Paulus gave a very good answer. I would simply add that when a central bank has less leeway using interest rates to stabilize the economy, other automatic stabilizers are all the more important, but they are one tool among others to improve the situation. The government decided to change them. Thank you very much.
Just to throw in a question, Governor, Deputy Governor, I really think today has been a real education, if I could call it that, on the value and the stability of some of the national institutions and agencies we have in Canada. The question that I get the most when either the Governor, the Bank of Canada, or the Minister of Finance speaks and we're talking about liquidity in the market is how do you explain that in layman's terms? And what does it mean for John Doe out here in the corner of the street who's got a small business or is working for a small company? Just can you explain that in layman's terms to us? It'd be a better explanation than I'm given, I'm sure.
Well, I guess let me just portray two channels for illustration. One I've mentioned before, so I can be quick, and that is that John Doe perhaps owns a small business and relies on a credit line for the fluctuations in his business. So he has money coming in, but of course he's got money going out. And while he's waiting for money to come in, money goes out too fast, and he draws on his credit line. And then when the money comes in, he pays back his credit line. That's a very common business model. Well, imagine if he woke up 4 weeks ago and the bank said, well, you've only used about, a third of your credit line. So we decided that from now on, it's only going to be this much because you don't need the rest. And it'd be just at the time when he was thinking, my goodness, I'm not sure I'm going to get paid by so-and-so, so I'm going to actually need that credit line to keep paying my people. That's what happened in 2008. Okay, because despite all the best efforts, it was a financial crisis and a credit crunch, and the banks were really trying to protect their capital positions and so on. Of course they do. That was a very bad shock, and financially worse than this one. Okay, not economically worse, but financially. So that's one scenario. So what if the central bank comes in and says, "Well, look, here's all the liquidity you need, Mr. Banker," and the banker says, "Oh, there's no need for me to adjust that credit line at all. So off you go, Joe. No worries." That's a big difference to how the economy behaves. And the other side of it is, suppose Joe decides he's got money saved up and it's in the form of bonds of some kind. And he just calls his broker and says, "Okay, I need so much of that money right now because I'm going to need to weather the storm." And his broker says, "Well, I don't know. I mean, the market's caving in, and I don't know if I'm going to be able to do very well with that, Joe. Really bad time for you to sell, and so on." And he says, "Well, I'll do it anyway," and he loses money. So what's going on there is the liquidity that's absent doesn't allow him to do his transaction in a normal way. And there's the central bank in behind that saying, "We got to make sure that market works for Joe." That's not just for the fancy market participants. It really does matter to Joe. And we call it liquidity. My favorite metaphor, I'm famous for them, right? is that when the economy goes into a place like this, it's like something just pops and there's a crater and the economy is falling into a hole. And what we do is we fill that crater up with liquidity so you can paddle your boat across it. And once you get to the other side, you don't need the hole to be all full of liquidity anymore. You're back on dry land and you're back in business. And so that's essentially what we're doing. We call it bridging or whatever, but it's liquidity really is just like water. And when we do it in one area, it usually seeps around everywhere else. Sometimes we have to do something a little special like yesterday to make sure of it. And that's what's going on. We're trying to make sure that this whole thing, we've cut rates 150 basis points, and we want to make sure that the maximum effect of that finds its way all the way to your friend Joe. Right now, the markets don't quite let it happen, but they will.
Thank you very much. I said your explanation would be a lot better than mine, and it certainly was. Look, Governor and Senior Deputy Governor, I want to thank you for your appearance before the committee today. We had, I think, 2 good hours, a real education. And I also want to thank you both, and especially you, Governor, for appearing before the committee so many times over the last number of years, and basically explaining how the Bank of Canada works and answering questions in this Parliament and the previous Parliament. And I also fondly remember the tour you gave the previous Finance Committee of the Bank of Canada, the good discussions we had there that night, to understand how the system really works and the inner workings, if I could call it, of the Bank of Canada. So with that, I know this may be your last appearance before the committee. It is interesting and really difficult times within Canada and globally. But I certainly sincerely thank you on behalf of the committee, on behalf of Canadians, and I think if anything, you can be absolutely proud of your term as Governor of the Bank of Canada. So thank you both. And with that, we will suspend for about 2 minutes and come back and do our sound checks for the next panel with the Minister of Finance. Governor, Senior Deputy Governor, thank you very much. And we'll suspend for a couple of minutes.
Thank you all.
reconvene the meeting and welcome to the second panel of the House Commons Standing Committee on meeting number 19. And as everybody knows, we're operating under a order of reference of Tuesday, March 24th. And the committee is meeting on the response of the Government of Canada to COVID-19. Today, and especially with the Minister and his officials here, we're considering a bi-weekly report that has been provided by the Minister of Finance on the actions undertaken pursuant to Parts 3, 8, and 18 of the COVID-19 Emergency Act. So with that, I know the Minister's time is limited, and we really appreciate Minister. In fact, I was trying to give you a break and not have you come to this meeting today, but thank you for finding the time later in the day to appear yourself in person. And I think you've got about 45 minutes, and then we'll go to officials after that. So we'll allow you to start with an opening statement and go to questions. And the first one's up on questions is Mr. Poilievre. Go ahead.
Well, Thanks very much, Mr. Chair. I'd like to take the opportunity before I begin to thank the committee for having me here. And I'd also like to thank the members of the Standing Committee on Finance for the work that they're doing. We obviously know that COVID-19 is causing unprecedented disruption to the economy here at home and around the world. None of us has faced a crisis like this. Our government knows that Canadian workers and businesses have been through a tough time already, and that this difficult period is continuing. And that's why we're moving rapidly to help as many Canadians as possible, as quickly as possible. We're creating, developing, adapting, and delivering measures in record time. Today, my goal is to highlight some of the measures that we've announced recently, including enhancements to programs, in anticipation of your questions. Earlier this month, when I met with you, I talked about the Canada Emergency Response Benefit, which provides $2,000 every 4 weeks for up to 16 weeks to workers who lose their income as a result of the pandemic. What we've seen over the last week is that millions of Canadians have successfully applied to the program and received payments. We want this benefit to be as flexible and accessible as possible. That's why, for example, it's available to workers whether or not they have employment insurance. No one should have to choose between protecting their health, putting food on the table, or paying for their medication or caring for a family member.
Yesterday, the Prime Minister announced a new measure to enhance and expand the eligibility criteria for the CERB. Workers can earn up to $1,000 per month and still receive the CERB. This amount includes salaries and fees as well. The CERB is also offered to those who were unemployed before the pandemic and who ran out of employment insurance and cannot work because of COVID-19. Seasonal workers who cannot work and because of the pandemic will also be eligible.
Canada Emergency Response Benefit is an important part of the government's COVID-19 economic response plan to support Canadians and support businesses facing hardship as a result of the COVID-19 global pandemic. We also need to recognize that the pandemic has placed a significant amount of stress on certain workers. Take those working in hospitals or nursing homes as examples, or the people who are ensuring the integrity of our food supply, or those providing essential retail services to Canadians. The work these people are doing is essential. However, their salaries are sometimes less than what they'd receive from the Canada Emergency Response Benefit. So we want to boost the salaries of these essential workers' wages. We're working with provinces and territories to offer a cost-shared, temporary top-up to the salaries of all low-income workers deemed essential in the fight against COVID-19. Through this new transfer, provinces and territories will be able to provide a salary top-up every 4 weeks to the essential worker who earns less than $2,500 per month. The Government of Canada will cover a portion of the cost of the top-up and will provide an important boost to the frontline workers in our hospitals and long-term care homes those working to make sure their groceries are well stocked, and others. En vertu de l'annonce faite hier,
based on yesterday's announcement, the federal government will protect essential workers in Quebec and British Columbia. It also is offering support to employers as part of its economic plan to respond to COVID-19. As you know, the CERB covers 75% of an employee's salary, up to $445 a week for up to 12 weeks. As I said earlier, companies aren't all the same, and neither are their employees. So we've modified the eligibility criteria for the wage subsidy to allow as many workers and employers to be eligible. Under C14, which was adopted by the Parliament last Saturday, employers must show that their revenues dropped by 15% in relation to 2019 and 30% for the months of April and May. Recognizing that the pandemic had a negative impact on employers as of mid-April.
Benchmarks to determine their eligibility based on their loss of revenue. They'll be able to compare revenues of March, April, and May 2020 to that of the same month of 2019. Alternatively, they can use an average of revenues in January and February of this year. This is especially beneficial for new businesses and startups that might not have a year's worth of earnings to look back on. Employers will calculate revenues through one of two accounting methods, either the accrual method or the cash method. Afin de rendre le réemploi des travailleurs
to make re-employing employees easier and more efficient, we've also changed paid contributions to employees that employers have to make, and this will affect the systems in Quebec.
Assess and respond to the challenge of COVID-19, and we stand ready to take additional actions as needed. Earlier today, the Prime Minister announced that we're making the Canada Emergency Business Account available to more small businesses. The CEBA was created to provide help for small businesses and not-for-profits to pay for non-deferrable operating costs. When we initially launched CEBA, the eligibility requirements required employers to have paid between $50,000 and $1 million in total payroll in 2019 to qualify. So we've always said COVID-19 economic response plan is responsive. We heard from Canada's small businesses. We want to make sure that businesses are getting the support they need, and so we've expanded the criteria. CEBA will now be available to businesses that paid between $20,000 and $1.5 million in total payroll in 2019. In addition, the government's also providing up to $306.8 million on a cash basis to Indigenous businesses unable to access the government's existing COVID-19 support measures. This includes access to short-term interest-free loans and non-repayable contributions. Financial support for Indigenous businesses will be provided through Aboriginal financial institutions, which offer financing to First Nations, Métis, and Inuit businesses. Canada's COVID-19 economic response plan is the biggest economic program of our lifetime. Nous sommes prêts à faire.
We are ready to do everything we can to ensure the safety of Canadians. We are going to support workers, companies, because we know this will help the Canadian economy to rebound quicker when this crisis is over. And this is how we'll be able to make Canada even better. Thank you very much, and I'd be happy to answer your questions. Thank you.
Thank you very much. And just to departmental officials and your staff and others, I do want to thank you for the bi-weekly report. There's a lot of information in that report, and I know it has to be difficult pulling that together with all the other the stuff that is going on these days. So we'll go to 5-minute rounds with the minister, and we'll start with Mr. Poilievre, and then Mr. Fragiskatis, Mr. St. Marie, and Mr. Julian. Pierre, you're on. You there, Pierre?
Thank you, Minister. How many medical face masks did your government throw away last year?
I don't know if the technician can help. Mr. Polyev is actually sideways, so I'm looking at him. I'm looking at him vertical. Unless you're actually lying down.
It's been a very long month, Minister.
Okay, so,
actually, he's sideways as well, but I think we have a habit of looking at each other sideways.
Okay, well, thank you for the question. I think importantly, we are working hard to make sure that we have the personal protective equipment that Canadians need.
So how many did you throw away last year?
Again, I'm sure that we can continue on other questions if you'd like. I don't have anything to respond in that regard, but I know that we're working hard to make sure we have the protective equipment that Canadians need.
Okay, so the answer is now made public. Your government had tried to cover it up, but you threw away 2 million essential face masks last year and 440,000 medical gloves. That's in addition to 16 tons of personal protective equipment you sent outside of the country, leaving many people scrambling. I had a call from a member of parliament today who's literally driving around to seniors' homes, providing them with face masks. Like there's no other supply with your stockpiles having been emptied. And he was shocked to learn that HST applies on the purchase of essential medical and personal protective equipment. So in addition to having driven up the price of this equipment by throwing it away and giving it away, your government is actually taxing this essential equipment. Would you, I'm prepared to call on behalf of the official opposition, call on you to lift HST off of personal protective equipment. Would you commit here and now that your government would stop taxing this vital equipment to make it more affordable for groups and facilities that desperately need that equipment at this time?
Well, I think, as you know, we are in the midst of an extraordinary challenging time in getting the proper personal protective equipment ready and available for Canadians. I know that my colleagues have been working hard on this front. We've secured many things that we recognize are both critical now and will remain critical. So we're going to keep doing that. We're going to keep making sure that we have access to the sort of equipment that we need at this time, that we're prepared to deal with this crisis. And as with any suggestions that come from parliamentarians, we do consider them in order to make sure that we're responding in a way that's appropriate. All
right, Minister, is that better?
That is better. Yes.
I do have another question for you. A great Spark Street businessman, Sam Al-Sadeh, was telling me that many of the small businesses on Spark Street are not able to access the emergency business accounts because they don't have payroll. Now, it's positive that you've lowered the payroll requirement down to $20,000, but many new businesses, often immigrant-owned businesses, bring in family members to run the business, do all the work, and they all decide not to take a wage so that they can put all their money into debt repayment and growth. Now, they can't get the wage subsidy because they have no historic payroll qualified, and they can't get the access to the emergency business accounts. Would you consider allowing another measurement to qualify other than payroll, so that deserving businesses like the ones that Sam is talking to can have a chance to get that $40,000 and keep their businesses alive?
Well, let me start by saying we're trying to make sure that the programs we put in place are responsive to the challenges that we're facing right now, and that's why we've done multiple things that are helping in many ways. Obviously, we've had many people, including many small business owners, who have decided to go on the Canada Emergency Response Benefit. And in the case of Sam, I suppose there would be many family members that might be able to actually go on that emergency response benefit. So it could be multiplied many times over if they meet those criteria. Additionally, as you know, we did change the criteria for the Canada Emergency Benefit Account. Now there'll be more than 1 million businesses that will be able to apply for that loan. What's happened so far is I've got the most up-to-date numbers. We've now hit 220,000 businesses have applied for it, and that represents about $8.8 billion in financing that's been realized. And of course, 25% of that will be forgivable if they pay it back by the end of 2022. So we are constantly looking at making sure our measures are responsive. You've seen that today. I hope that there's other measures that are supportive for that business.
So, thank you.
I know we'll continue
running out.
You are at a time, Pierre.
Wayne.
You'll be back on again after you're quite a bit over.
Okay.
We'll be back to you on the next round. Mr. Fragaskatas and then Mr. St. Marie.
Minister, thank you very much for the work so far. And I also have to say thank you very much for listening to members of Parliament. Where gaps have existed, they have been filled, and I can speak for myself here, but I think colleagues would agree that the engagement has been very good on your part and on the part of your staff in the Department of Finance. Today's changes were especially welcome, so I did want to put that to you. Minister, this is obviously not just a Canadian problem, it is an international problem, one that necessitates an international solution. And so with that in mind, I just wanted to ask you, how are we approaching that? Are we approaching it through particular forums? Is the G7 going to become quite critical in that regard? Is it the G20? How do you envision that playing out? And secondly, and in that vein, what are key issues of focus for you from the financial side when you're coordinating with and interacting with your counterparts at the international level?
Well, thanks, Peter. It is most certainly a challenge that's facing not just Canada, but countries around the world. We have been very deeply engaged with other countries. We're trying our best not only to be coordinating as best we can, but also to understand measures that other countries are taking to determine whether those might be helpful in our country. This week I was in a meeting with the G7 countries earlier this week, with the G20 countries yesterday, and with the International Monetary Fund Committee this morning. So we are in very regular contact. The focus in those meetings is comparing what we're doing, is also thinking about how we deal with the international financial system to make sure that's operating effectively, and then also to think about what we can do for countries that may be more impoverished, that have significant challenges. So, we've been looking at how we can deal with the least well-to-do countries through the Paris Club and through G20. We've put forward important measures to actually be supportive of the International Monetary Fund so that they can deal with the many responses that they're getting. And then on specific issues, we're actually trying to learn from each other. I was back and forth with the Australian Finance Minister, Josh Frydenberg, today, looking at our program versus what he's been doing with helping tenants with rent. So as you know, we've talked about our need to deal with that as well, which we're working on. And that's helpful because we're looking at different ideas. So there's multiple ways we're working together with the international community. That will continue. Of course, every country has a different situation, and we're in a positive situation in Canada comparatively, but still have very significant challenges.
Thank you very much. If I could shift from the international to the domestic, and we've introduced a number of measures, but as you yourself has said, this is a phased approach, and we will look at gaps where they exist. I want to ask you about seniors. I've had a number of seniors reach out, constituents who I know personally, in fact, who are very worried about their retirement security. Seeing what's been happening on the markets, it's pretty obvious why. Do you have thoughts on that, and what we would consider potentially looking at in the future to help seniors who are really wondering about their future stability and their retirement years?
I think, obviously seniors are probably the most anxious of Canadians right now because of the health issues around COVID-19 and the reality that it is hitting seniors disproportionately hard. So I do know that we need to be very focused on our health systems to make sure that they are supported, which we've been doing to make sure that we work together with the provinces in the securing of the kind of equipment we need is also critically important. From a financial standpoint, most of our efforts financially have been trying to bridge people through this difficult time. And that means thinking about people in particular in businesses that are having fundamental change in their revenue as a result of COVID-19. From the senior standpoint, guaranteed income supplement and old age security, of course, is secure. So there's been no change in that. We also, when we introduced the GST low income tax credit top up, which we did, that had a very significant impact on seniors. More than 80% of single seniors and more than 40% of seniors and couples were advantaged through that measure. So that's quite helpful. To the extent of their investment accounts, we have seen a huge amount of volatility in the investment accounts, as you know. It was from lows, it's come back up. Nonetheless, we know there's anxiety there. The decision to reduce the amount of the RIF that people need to take out by 25% is important, consistent with what was done in 2008, 2009. So we'll have to consider challenges as they come, Peter. We're going to keep doing that. And we recognize that we need to support seniors as they're very anxious around health, and we'll continue to do that.
We will have to end it there, folks. We'll go to Mr. St. Marie, Mr. Julian, and then back to Mr. Polyev. Gabriel.
Oui, merci.
Hello, thank you, Wayne. Good morning, good afternoon, Minister. Thank you for being with us. I'd also like to thank all the officials that are with us for this meeting. I'm very happy with the announcement today for commercial rent. I'm very happy with the extension of the criteria with the 50,000 to 1 million payroll. Well, this will make a really big difference. I'm happy to hear that. In terms of the emergency loan, there's something strange with the formula. Pursuant to the requirements announced by the Government of Canada, the board confirms that they are not an entity or a partner that exercises political functions. And this concerns municipal city councillors, a prefect in Lac Saint-Jean, or a city councillor that has a boutique in the Laurentians. These type of people could lose their companies, and there are many of them. Some financial institutions don't look at this exclusion, and their requests have been frozen. Thank you. Thank you for your comments. Clearly, there's always things that we have to consider. The reason for that exclusion was clear. If someone such as you or myself, well, it wouldn't be good for us to have access to a loan for a small business. That was our concern. We know that we have to consider politicians who work part-time, for example. We have to look if that was the objective of the situation. So we're looking at our approach. I don't have any news right now, but I do understand the challenges. Nevertheless, we want to ensure that the loan is for people who really are in need. So we always have to have criteria in place, but we will consider them to make sure the criteria do work. Thank you. With respect to commercial rent assistance, can you tell us more about that or give us a date, whether this will be retroactive? How will it work? Are you already able to give us more details? I don't have any details right now, I'm sorry. We are considering and looking how things could work. But as you said, the most important thing for companies, SMEs, are fixed costs. And that's one of our objectives. that is important. So we're examining things. And of course, this is provincial jurisdiction. And we do have to work with the provinces every week. When I meet with the Minister of Finances from Ministers of Finance from the provinces, I discuss SMEs, and this will give us an approach that will help SMEs, but it has to be done in hand with the provinces. Thank you. Dairy farmers are also experiencing difficulties, and they want to increase the margin from the Dairy Association to 8 million. Is that something you're looking at? If there's a letter, we could examine it, but until now, that hasn't been part of our program. Thank you.
Thank you both, Mr. Julian, and then to Mr. To Polyev and Ms. Kotrakis after that. Go ahead, Peter.
Thanks very much, Mr. Chair. Thanks, Mr. Morneau, for being available. I did want to pay tribute both to your hard work. I know you're working 20-hour days, and equally your accessibility. You've been remarkably accessible over the last few weeks. Normally, opposition members don't necessarily pay compliments to government members, but I think it's important to underscore your availability and discussions around these important measures to help Canadians. And the announcements that have been made over the last few days, improving CERB, putting in place a Courage bonus. These are all issues that we've raised with you. I raised the Courage bonus last time you appeared before a finance committee. The enlarging of accessibility around the emergency business account. Those are all important steps. I think we would agree that there are still many other measures that need to be taken to avoid the people are left behind. And so I wanted to ask you a couple of questions. First, I had a roundtable, a video conference with the small business community in my riding. They raised the rent abatement as an extremely important measure that needs to be taken. Gord Johns, our small business critic for the NDP, and myself have written to you about a 66% rent abatement proposal. And we certainly hope that that is the measure, as we've seen with other countries, that you put into effect. France and Denmark and Australia, as you note, have put into place rent abatement measures. Secondly, credit card costs and the mortgage costs are exceedingly high. And the banks have not made the type of sacrifices that we're seeing many other Canadians make. I have not heard of a single person that has had a mortgage deferral approved without penalties or interest or fees. And this has an impact on our small business community and, in fact, in all Canadians. We've seen credit unions like Van City reduce their rates to zero. We have not seen the same kind of shared sacrifice with banks paying their part. Will you use the tools that you have to make sure that the banks in Canada pay their fair part in fighting back against this crisis so that no one is left behind? And my final question is around the CERB, the emergency response benefit, as you know, and the minister has said this publicly, is available to everybody who applies. You've referenced both seniors and students being left behind right now. Jagmeet Singh proposed that it be a universal benefit. Right now, the structure is already in place. So will you look to putting in place that benefit so that everybody who can take advantage of it can actually access the emergency response benefit, and of course, as has already been proposed, have it taxed back if they don't need it when they file their income taxes this summer? Thanks for being here, and thanks for answering my question.
Okay. Wayne, do I have time?
Yeah, you've got 2 minutes. Go ahead.
Okay. Well, there's a few things there that Peter, you're asking. First of all, on rent, we, as I mentioned, we are working through that issue. It is a provincial jurisdiction, so I've been bringing it up to the provincial finance ministers each and every week over the last month, and they've been making progress. Some provinces have done different things than other provinces. Saskatchewan has moved forward with the $5,000 benefit for small businesses. So we do need to work together with provinces in this regard, and are doing that right now. So that is, from our perspective, important. From the standpoint of the banks, we'll continue to work with the banks. We've had, as I said, 220,000 loans that have been now administered on a very short order with the banks. $8.8 billion has been moved out. That was an enormous effort that we did work together with them to make sure that could happen. Of course, we pushed to make sure that they move forward on helping on credit card fees, and they've all cut those credit card fees for people in distress in half. I'm not saying that we shouldn't continue to put their feet to the fire. We will, but we've made significant progress, and we're going to continue to encourage them to support their clients or Canadians. With respect to the CERB, we think it's important that it supports people who have lost income as a result of COVID-19. And that's how we've defined it. And we're going to continue with that. We're going to continue to make sure that people who find themselves in a vulnerable spot because of COVID-19, that we're dealing with them. And that's the kind of approach we're taking with students, for example. We don't think a universal benefit would be appropriate in this regard. There are many, many people like you and me that have not been impacted from an income standpoint as a result of COVID-19. We're focusing our efforts on those people who have been impacted and making sure that we deal with those as best we can. But thank you very much.
Thank you, and you're right on time, both of you. That's unusual. We will now go to Mr. Polyev and then on to Ms. Kotrakis. Pierre, are you there? Close your mic.
Thank you. Thank you very much, Mr. Chair, Minister. I want to reiterate what I said earlier. We have a shortage of personal protective equipment in Canada because your government threw millions of face masks in the dumpster and 440,000 articles of medical gloves. You also gave 16 tons of medical equipment to China when we most needed it. This, of course, has driven up prices here in Canada and driven down our stockpiles. One thing you can do to mitigate the damage your government has done in this area is to take the HST off of those kinds of protective equipment. I know that much of it has to be bought privately for long-term care facilities, seniors' homes, and other places that are not owned or run by government. And so I think you'll agree with me that people should not have to pay tax on that equipment. And I encourage you to remove the HST. That would be a practical and simple thing to make it more affordable. On to the CERB. I want to congratulate your government for listening to demands by numerous MPs, myself included, to allow people on the CERB to work and earn some income. You've allowed them to earn up to $1,000, which is definitely an improvement over the original program. That only works out to about 8 or 9 days, though, out of a month for a lot of workers. And if their employer was to come along and say, listen, good news, I have more work for you and I can pay you for it. Can you do some extra work? A lot of them would have to say, no, I can't, I'm afraid, because I'll lose my CERB and I'll be worse off working than I am, working more than $1,000 worth of wages than I am right now. So would you consider another methodology of allowing people to earn more than that $1,000 so that they're always better off taking extra hours and earning more wages?
Well, thank you for your question. We're working to make sure that these programs work and that they serve their goal, which is to provide income for people who are not having income as a result of COVID-19. And we're trying to make sure that the adjudication and that the delivery of the benefit are things that can be administered in this emergency time period. I think that one of the things that we've talked about in the past is that this we expect as a temporary measure. This is a measure that we've put in place for 16 weeks. We're trying to make sure that it's administered as a temporary measure in a way that supports people, but that doesn't delay the ability to get the payment out to people. So in this regard, there's always going to be a balance. We're trying to balance it so that we make sure that it has the right incentives as well as protects people. And we've come to this conclusion looking at an approach that we think that works. There will be other things that we're going to continue to need to look at. We know that in a time of emergency, we don't have all the answers up front. We're trying to make sure we get to the answers in a way that makes sense. And to the extent that there are things that we need to look at and come to a next iteration, we have done. And that's a good example of how we moved to the $1,000. I think on that issue, we feel that we've come to the right conclusion. There will be other issues, I'm sure, that we'll continue to look at to make sure these programs are working successfully. And of course, we want to make sure that they're delivered. And so we were so pleased to say that we were able to actually move forward with this CERB on the timeline that we had. We're so pleased to see millions of Canadians that are actually on it. Having been involved in international meetings this week, I think one of the things that Canadians can be proud of is not only did we come up with these measures, have we been iterating them, but they're actually being delivered to people, which we're finding is not necessarily the case in other countries where they're not having the same ability to get those benefits out to people, which of course is the ultimate goal. I mean, we want to make sure people actually get access to the money.
That is true. That is true. That is true. That said, there are businesses, small businesses, who are falling through the cracks. They can't pay wages right now because their governments have shut them down. Either that or they don't historically have wage earning employees. And they're not eligible for any wage subsidy. They themselves don't pay them, they don't get a wage. So they've never met the $5,000 threshold to get the CERB. And because they don't have a payroll over 20 grand, they can't get the emergency business account either. This is a large number of people who meet this definition. One of the easiest ways to help them quickly would be just to give them back the GST they've remitted to your government over the last 12 months. Would you consider doing that, Minister?
Actually, you've mentioned this before, and we've looked at this, and it just doesn't work. So I know you have argued for this. It doesn't work in a number of ways. First of all, it's not their GST. They hold that GST in trust. So it never was their money. So it's not an easy thing to necessarily give back.
Well, it's not your money either. It's not your money either, Minister, with respect.
Okay, Pierre, let the Minister answer.
There's other reasons, of course, that are appropriate to consider here, and that is that this measure would have a very, very different impact on different business sectors, because the way GST is done is it's based on the value add. So some businesses, like the ones in Wayne Easter's riding, their farmers wouldn't get anything from this because they wouldn't be eligible. And finally, GST HST is different in different provinces. So the administration of this is not straightforward. We would not be able to do this in a timely way. So we considered that and concluded that it wasn't a measure that was appropriate. We also know that for those businesses that you're talking about, that in most cases, they will be able to get the Canada Emergency Response Benefit, because if they don't pay themselves in salary, they will be able to claim dividends for the Canada Emergency Response Benefit. So that will enable them to be eligible. So we're hoping that works. Of course, we're going to continue to look at these measures to make sure that they're working broadly.
Okay, last question. We're going to hold you 5 minutes more than you wanted, Minister. Ms. Koutrakis, you'll wrap it up with the Minister. I know there'll be disappointed members didn't get to question the Minister, but next we got officials. So, Annie, you're on.
Thank you, Mr. Chair. I would like to thank Minister Morneau for taking time from his very busy schedule.
Can others hear Annie? Your mic, Annie?
I can hear Annie.
Yeah,
okay.
You can hear? Thank you.
Yes, I can hear you. It's a nice painting behind you, by the way.
Oh, thank you so much. I wish I was there. It's Paris.
Well, maybe not today.
No, not today. Yeah. I wanted to take the time to thank you for appearing before the Finance Committee. I know you're very busy, and to also extend a huge thank you to your staff and to everybody in the Finance Department. I know how difficult and challenging it is for everyone, and I know you're working around the clock, and I really wanted to say a huge thank you on behalf of all Canadians. You are acting to close all the gaps, I know, but no matter the amount of fine-tuning you do, there will always be some people who don't quite fit the criteria. Clearly, you are doing your best and listening to all MPs and Canadians and making adjustments. I have received numerous phone calls and emails from my constituents thanking the government for being so open and willing to hear and listening and adjusting as we go along. So on behalf of my constituents, thank you as well. Minister, can you comment on where Canada's COVID-19 economic response plan stands relative to our needs in comparison to similar fiscal stimulus and aid packages announced by other countries around the world? How do we know if we are doing enough, and how willing and able is the government to go further in our spending as the situation evolves?
Well, thank you, Annie. This is an important question. I think what we will see is different countries doing different things based on their situation. We're lucky that our situation fiscally is strong. So the measures that we've put in place now represent about 8.5% of our GDP. That's obviously enormous. It's very significant, both in terms of the direct measures to people, the $107 billion or so that's going directly to people, through the wage subsidy and the CERB, but it's also very significant in terms of the deferrals that we put in place on taxes, as well as finally the credit that we're putting out for businesses. So it's significant in multiple places. In comparison to other countries, we are seeing we're doing that in that international comparison now. We are among the leaders in that. Obviously, have a fiscal situation that enables us to do that. Many European countries don't have that same positive starting point, but we've been comparing and see that we've been more aggressive in supporting people and have been more aggressive in supporting businesses. And as I mentioned on an earlier question, we've also been more effective in actually getting it done. So getting the business loans out, where in our country they're actually out and in people's pockets already in many cases. And of course, our CERB is out and in people's pockets in millions of cases. So this is very positive. So in that way, Canada not only has done the work, has made the commitments, but we're actually also delivering. And in some countries, the commitments and the delivery are separated by administrative challenges that we've overcome. So we'll continue to look at other countries, how they're doing it, compare our efforts, make sure they're appropriate for us, but also make sure that they're appropriate for supporting, all Canadians, your constituents, being good examples.
Last question, Annie.
The announcements for things like supporting small business with rent and implementing a top-up for essential workers will require partnership with provinces and territories. Can you tell us more about the partnership between the federal and provincial and territorial governments, what they look like, and the next steps for these programs?
Well, I can't quite yet, Annie, and the reason I can't yet is because on the essential workers file, you'd recognize that many of these essential workers are actually in sectors that the provincial government's responsible for: healthcare workers, old age care facilities. So we do need to work with them, and we've asked for them to come forward with us to help us to deliver those supports and also to be part of the ability to fund it. So that discussion is ongoing. With respect to rent, we're still at a stage where we're coming up with the final details on how we can make sure that works, and looking towards working with provinces on that as well. So I'm not quite far enough along to give you more details. We're like with all of the things we're doing in COVID-19, we are trying to get to good conclusions quickly, but also making sure we can administer them. And that's why we do need that discussion with provinces. We do need to make sure we have the mechanisms, which I'm hoping we'll have in the very near future.
Thank you, Minister. I know you have to go. We've held you a little over time, but thank you for coming at later today. We appreciate that very much, and we do appreciate all the work you're doing, all that the officials are doing. There's great feed-in from the caucuses of all parties, I know that, and I've even said, my God, the centre is listening more now when we're in our ridings than they are when we're in Ottawa. So that's a good thing. So
can I just take a moment? I think I mean, we know that we're doing this virtually. We know that it's different. I want to say that this sort of accountability we think is very important. Je sais que c'est très important d'avoir.
I know it's really important to have the opportunity to be together because it's really important for our democracy.
To want to make sure that we give you information from the Department of Finance, that we find a way to be as accountable as we can be, given that we're in a challenging situation. We recognize that's important. And I know there's a lot of people working behind the scenes, translators and people doing the technology. I want to thank all of them too, because they are people doing essential work, and we know that they could be at home. So thanks everyone for making this happen today. We're looking forward to keeping you up to date. And I know my officials who have been working very hard are available now, as well as officials from CRA and other places. So I'm sure they'll be able to answer your questions. Thanks very much.
Okay, thank you very much, Minister. Good luck and wherever you head from here. So the list will be this. We'll turn to officials now. We'll go to 5 minutes, and Elizabeth May, if you want in for a question at some point, raise your hand. I don't see you now, but you can raise your hand. Okay.
I'm not going to ask for a question in this round, Mr. Chair. I'm saying goodbye to my friends. Merci mille fois.
Okay.
Thank you very much,
Elizabeth. So we will be starting. I'll give you the full list so everybody knows where they're at. We'll be starting with Mr. Cooper, then Ms. Zerowitz, Mr. St. Marie, Mr. Julian, Mr. Cumming, Mr. Fragiskatis, Mr. Morantz, Mr. Polyev, and Mr. McLeod. And if anybody else wants in, send me a note on a P9 if I missed anybody. So you're on, Mr. Cooper, 5 minutes to officials. Go ahead. Welcome.
Okay. Well, thank you, Mr. Chair, and thank you to the officials for making themselves available today. I want to direct my questions to the finance officials, and my question relates to the wage subsidy and, in particular, the portal and when it will be up and running. It was on April 1st that the Minister of Finance provided details of the new enhanced wage subsidy. It was at that time that a timeline of 3 to 6 weeks was provided for. 2 weeks ago, the Minister appeared before this committee, and he indicated, or at least officials indicated, that they were optimistic that it would be closer to 3 weeks rather than 6 weeks, that the portal would be up and running. By this time next week will be more than 3 weeks. So I want to ask the officials whether small businesses can look forward this time next week to be able to apply to the portal.
Mr. Chair, it's Andrew Marsland. Perhaps I could ask my colleague Frank Vermont from the CRA to answer that question. They've been working very hard to stand up this system.
Frank, you're on. I don't see your picture, but I see your name. Are you still there?
I'm still here. Can you hear me?
Go ahead. Yeah, go ahead.
Yeah, thanks for the question. And we definitely have been working very hard to stand up the portal. It is a significant undertaking, complex, much more, for example, complex than the CERB. But we are making excellent progress. Our plan is to open the portal on April 27th, if everything goes according to plan, and so far everything is. So we'll open that on April 27th. Then during the week of May 4th, we'll be in a position to process and release payment for most of those applications, the ones that don't need additional review. And so later on that week, some of those payments will start going out for those on direct deposit. So that's our plan, and we're certainly happy to keep you posted on that.
So just to clarify, in terms of a timeline, April 27th, the portal will be up and running. If one were to apply on April 27th, they could count on the money to be deposited by May 4th?
Be a little bit later than that. By May 4th, we should be able to have processed those applications that don't need additional review. And we're hoping that is around 90% of them. Then they do get sent to PSPC, and it takes a couple of days to issue those payments with respect to direct deposit. But certainly our plan would be that during that week, that money would be available.
So just again to clarify on the timeline, April 27th, the portal is opened, one applies. May the 4th, the application is processed and then money is deposited. Is the process timeline about a week? between the application, processing, and then delivery?
For the first application, it will be about a week. For subsequent applications, it will be more like a couple of days.
Okay. Thank you for that. I also want to ask, it's a question that has been asked, but there hasn't been an answer that has been provided. So I'm hopeful that perhaps one of the finance officials will be able to shed some light, because it's an issue of importance in my riding and throughout the province of Alberta and Saskatchewan, and that is with respect to our energy sector. The minister on March 25th stated that there would be relief that would come in a matter of days or weeks. We're now almost a month since that statement. Can any officials shed light on when relief can be anticipated to be delivered?
Who wants to try that one, folks?
I can take that question.
Go ahead.
Yes, so as both the Prime Minister and the Minister of Finance have said, and you rightly quote, the government is very much aware of the extremely challenging circumstances in Canada's energy sector, both from the double whammy of the OPEC plus supply glut and the demand depression that is resulting from the physical distancing requirements of COVID-19. This is something actually me and my team are working on, and so I'm happy to kind of say what I can about it, which is we've been working really hard, understanding the situation and giving thought to options that will make a difference, that really will meet the needs of a range of companies in the sector and in different regions of Canada. So I'm not able to say right now, as the government will need to move forward with the announcement. But I assure you that this.
And I don't want to cut off, and I appreciate that. But my question was with respect to the timeline. The minister was initially pretty specific, weeks, even days. It's now almost a month. So again, I just ask, and you may not have an answer. If you don't have an answer, maybe that is the answer. But I would like to know, and my constituents would like to know what the timeline is, because the clock is ticking and people out here are hurting.
I think, Michael, that would be the minister's decision to make that point. But Evelyn, if you could finish your comment, then we'll go to Ms. Zerowitz. But you've made your point, Michael. I think it's been heard loud and clear.
Yeah.
Evelyn?
Yeah, just to say, it continues to be the case that this is a pressing and recognized challenge. And I know it's not what you would like to hear, but it really is a stay tuned, and we're very near.
Okay, thank you both, and thank you for making the point. Michael, we'll turn to Ms. Zerowitz and then Mr. St. Marie.
Thank you so much, Mr. Chair. Can everyone hear me?
We got you.
Yes, good. I think Mr. Cooper sort of just triggered me to ask another question first before the real question I was going to ask, and it was about speed. And I wanted to just maybe follow up even on where Minister Morneau ended off. I want to say a huge thank you to every single one of you in the Department of Finance, in the Department of Employment and Social Development, in Canada Revenue Agency. It has been unbelievable what you have been able to help produce and what we have been able to launch since this whole pandemic was underway just over a month to 5 weeks ago. We know that there's many people that are still waiting out there for a number of programs, but I can tell you, I am so enormously proud of our Canadian bureaucracy, and I talk about all of you guys all the time to say it was nothing short of a miracle for us to be able to introduce the Canada Emergency Response Benefit in such a short period of time, to bring out the GST credit a month in advance before we even thought about it, but before we had originally planned, the Canada Business emergency plan that the banks are putting into effect, that over 220,000 businesses have already applied for, according to the minister today. So I want to say and start off by just saying thank you. Thanks to all of you. Thanks for stepping up. Thanks for your creativity. Thank you for your hard work. We are so blessed to have such an unbelievable civil service here in Canada. So I think what I want to ask you, just because there must have been a lot of discussions, going on in terms of how do we actually deliver these programs and what's the best way to do it. Can maybe someone talk to what was your key objective and what was the key thing that you were thinking about that sort of led you to sort of introducing these programs? So what was it that sort of helped you make a decision about how to introduce? So if maybe someone can talk a little bit to that, that would be great. And then I hope to have another minute left to sort of ask one more question.
Well, perhaps I'll begin, Mr. Chair. It's Andrew Marsland. Unless Cliff, you want to go first? But
go ahead, Andrew.
Go ahead, Andrew.
Yeah.
My mic was off. I was going to turn to you. Go ahead.
So I was going to begin by saying that of course speed and effectiveness are the key criteria, and when you look at these things, we're lucky in that we have a system in the Canada Revenue Agency and Service Canada that is equipped to deal with these programs and has the nimbleness to adapt. For example, to stand up the Canada Emergency Recovery Benefit, and shortly to put in place the wage subsidy. I think it's also important to leverage the private sector and through the loan system and work with them. So I think it's important to look at the toolkit and to look at its adaptability, and also to kind of understand that while we're in a crisis, it's in a broader context, and we need to think about having a system that has the checks and balances in place and is equipped to look at these things beyond the immediate term.
Thank you.
Did somebody else want in on that one as well? Was Cliff or?
Yes, Cliff Groen from ESDC. I would just add to Andrew's comments that when we were designing the CERB, there were three main criteria we had. It needed to be speedy. We knew it was absolutely critical that we deliver it on a very quick basis. It needed to be simple, because if it wasn't simple, there was no way we'd be able to deliver it. And it needed to be delivered safely as well. And we knew that if we made a commitment to deliver the program, it had to be done. And we didn't fail in that. And that's why it was important that both CRA and ourselves joined together to be able to deliver it in that time frame.
Okay, thank you. Go ahead, Julie.
Thank you. So just one other quick question. One of the things that, Governor Polos in the last session, he said, in answer to the question by my colleague, Ms. Koutrakis, she said, can we make up the 4 to 6% growth GDP loss that we're anticipating sort of happening over the course of this next year? And he said, absolutely. And he says there'll probably be some structural changes that'll have to change. But he says there's also going to be some positive structural changes, and there's some innovation that's happening. And so my question is really about the data that we're gathering. I think we're probably starting to learn a lot about our workforce right now. And I would love to know from anyone from the Department of Employment and Social Development, what data are we collecting in terms of the jobs that are lost, the age of people that are applying for the Canada Emergency Relief Benefit. So what data are we collecting so that maybe we can pivot to creating a better platform for our social welfare system moving forward? I'm particularly interested in the universal basic income, but I would love to know what data we might be collecting right now that might actually inform some of our decisions moving forward.
Who wants to take that? Or does anybody have an answer? I don't see anybody there.
No one from Department of Employment and Social Development?
Okay, who we got? Andrew, Cliff, or Jonathan, go ahead. Who's on?
It's Andrew Brown from
Go ahead, Andrew.
Social Development Canada.
Yeah.
So just to say that at this stage, we are very much in the early days. I mean, we're collecting a lot of volumetrics, I would say right now, in terms of the number of claims that we're seeing for the CERB, and CRA is collecting similar data. It will be taking us a little bit of time to start the analysis of that data so that we can understand better the people that it is helping, and we are very keen to understand more about those who are qualifying among the employed, but also among the self-employed, which is something that is new with this approach. So it's very much on our list, but too soon to report results at this stage.
Thank you so much. And thank you, Mr. Chair.
Okay, thank you. Thank you all. We'll go to Mr. St. Marie, then Mr. Julian, then Mr. Morantz. I may have put Morantz and coming in opposite order, but Mr. Morantz, you'll be after Mr. Julian. Go ahead, Gabriel.
Oui, merci.
Thank you very much, Chair. I would also like to echo Julie and thank the officials for all the work that they're doing during a crisis. There are a great amount of needs, so congratulations. Thank you very much. If I have time, I'd like to underscore two particular cases to have an interpretation of the program in place. First, we have a salaried employee that asked for the CERB. Their company decided to ask for the wage subsidy, except 75% of their salary is less than $1,000 a month. So in that specific case, does this worker, are they allowed to work, get the CERB and have the wage subsidy, which is under $1,000 at the same time? This person would not be able to refund this CERB that they received afterwards. Thank you.
Andrew, probably that goes to you, does it? Or is somebody else coming in? Is it seen as, I guess I'd put it this way, is it seen as double dipping? Andrew, can you?
Thank you, Mr.
Andrew Burke.
Okay. I was thinking Andrew Marsland. Too many Andrews on here, guys. Go ahead, Andrew Marsland. I don't know whether Andrew Brown wants in or not to.
Sure. If I understand the question, Mr. Chair, the question is if an employee, I wasn't sure about the assumptions behind the question. Is this the situation where an employee is rehired by an employer who is accessing the wage subsidy? And whether...
Yes, that's it.
Is it? Well, of course, if an employee was in the situation where accepting a job with the wage subsidy would provide them less, then I guess they wouldn't necessarily have to accept that job if they were in a worse position. But if they did accept the job and say they were better off with the wage subsidy, so they got up to $847 a week, and there was a period where they received both the Canada Emergency Response Benefit and a salary, then I think the government said when it released the background on the wage subsidy that it would consider an approach to avoid duplication, to allow that employee to pay back the CERB if there was indeed duplication, and that's something that we're looking at.
Okay, très bien, merci.
Great, thank you. That's clear. My second case is a company that's a startup. This company falls between the cracks. They had to spend $1.6 million to launch their restaurant as of mid-March. And to date, they've had a lot of expenses. They've had to hire a lot of people, spend a lot on inventory, and they've lost all the money they've spent. And there are no measures that seem to meet the needs of this company. $40,000 loan wouldn't really help them, even for January or February. The wage subsidy doesn't really work. We're talking about the January-February period. But for this person who's running a startup, is there a startup? They've spent more than $1.6 million, and there don't seem to be any support measures for them.
Hi.
Okay, go ahead, Soren Halverson.
Hi there. So it's Soren Halverson from Finance. And so the programs that I would point to would be the loan guarantee from Export Development Canada and the BCAP co-lend facility from the Business Development Bank of Canada. Each of those facilities pretty much provides 80% coverage on credit that a financial institution would extend to an operation such as that one. And so in the case of the EDC program, that takes the form of a guarantee on 80% of incremental credit that a financial institution would extend. In the case of the BDC program, it is 80 cents that BDC will lend for every 20 cents that the financial institution lends. The way to get those programs is to go through the existing financial institution with which the business has a business banking relationship. And those facilities make it easier for the financial institutions to continue to extend credit to businesses in situations such as the one you described.
Merci beaucoup.
Okay.
Thank you very much.
Thank you all. We'll turn to Mr. Julian and then Mr. Morantz and Mr. Fraser. Peter.
Merci beaucoup.
Thank you very much. I have 3 questions for our officials, and thank you very much for the work you're doing. First, when we're talking about the CERB, I'm looking at a student who works every summer and who's done their school year, and they planned on working as of April 20th. Is this student eligible for the CERB? First question. Second, when we talk about the wage subsidy for not-for-profit organizations and charities, do the regulations, are they more flexible for these type of organizations? Because they've told me very clearly that these people will lose revenues in coming months. They won't necessarily have lost revenues right away, but in coming months they will. So will there be some flexibility there for them in the regulations?
No question is around the wage subsidy for First Nations-owned corporations on reserve. This comes from a colleague of mine. Do First Nations-owned corporations on reserve have the right to access the wage subsidy? Merci beaucoup pour les réponses.
Thank you very much for your answers.
All right, it's Andrew Brown speaking. Perhaps I can take the first question, which related to eligibility for the Canada Emergency Response Benefit and with respect to students. And you gave the example of a student who has been regularly working for their summers and who would have been starting to work on April 20th, I believe you said. So in that case, we're talking about a student or a worker who has not yet started to work. And the rules for the Canada Emergency Response Benefit are that it's available to those who stop working due to the COVID-19 situation. So unfortunately, in this case, that student would not be able to benefit because they were not working and then did not cease working as a result of COVID-19.
Just if I could come in there, Andrew, and I know Peter will as well. The with seasonal workers, it is a little different. They are now they're not working either, but they lost their opportunity for a job as a result of COVID-19, and they are going to be allowed in. And you probably can't answer this, but the Prime Minister has said we would be looking at students, and we're all very happy that seasonal workers who've actually ran at EI, we're going back to a seasonal job, will be allowed in CERB now, but something similar has to be done for students. I think that's where Peter's coming from. Do you have any response on that?
So I can't say that where we'll be going yet on students. I can certainly say that the government has been working on other sorts of supports for students and for young people. In terms of the extension that was announced yesterday for seasonal workers who have recently exhausted their EI claims, it's a different group of workers who have established claims in the past and who we would have been expecting to be returning to their to their usual seasonal employment. And so in this case, that group that's been identified would be able to benefit because they're not able to return to their work due to COVID-19. The difference would be, well, it depends on each person's situation in one sense. But for example, students who have been working throughout the year, if they've been doing a part-time job and they had to stop that part-time job, again, because of COVID-19, they would be able to benefit. We expect that there are many students who would be able to benefit. However, those who may have been more focused on their academics, not working at the time, and therefore haven't stopped, are not eligible for the benefit.
Thank you, Andrew. What about the wage subsidy? Two questions there. Who can take them?
Perhaps Andrew? I can, Mr.
Marsland, go ahead.
So the first question related to nonprofit organizations and charities, and in designing the wage subsidy over a short period of time, we did engage with the charitable sector to understand the particular challenges they face. And there, I just briefly point out two areas of flexibility there. One is with respect to government funding. There is an election in the legislation that allows a charity or nonprofit organization to either include or exclude that. And depending on how it's funded, that might be to its advantage or not. For example, if it has kind of funding that is permanent, it would probably want to exclude it. If it has funding that is based on a service fee kind of basis from government, then it would probably want to include it in the calculation. The second area of flexibility related to the reference period in terms of either comparing, for example, March 2020 to March 2019, or alternatively, looking at February, March of this year and seeing how revenues have been affected. So there is some flexibility in there to accommodate the particular needs of nonprofits and charities. The third question related to First Nations corporations. A First Nation corporation that is owned by a First Nation individual would qualify for the wage subsidy. A First Nation, but the legislation excludes corporations owned by governments and corporations that are exempt on that basis. So that issue has been brought to our attention that there may be circumstances that are somewhat different with respect to First Nations corporations, and we're looking at those submissions.
Thank you, Mr. Chair. But just to understand then, at this point, they are excluded, but you are looking for ways that First Nations owned, First Nations community-owned corporation could receive the wage subsidy?
Yeah, if I could explain the general principle of excluding government-owned corporations that are exempt, in that, in many contexts, they have other means of support. For example, provincially owned corporations, federally owned corporations, and so on. That would cover corporations owned by First Nations, so they are excluded presently.
Okay, that give you clarity, Peter? Okay, then we'll move on to Mr. Morantz and then Mr. Fraser.
Thank you, Mr. Chair. Can you hear me?
Yep.
Good. My question is directed to CRA officials. And I wanted to just go back over some recent history. Before this crisis happened, there were two recent reports highlighting significant difficulties with CRA, particularly around accuracy of service and call centers. There was a CFIB report, so only 51% of callers received an answer to their inquiry, regardless of wait times. Only 60% of callers received complete or above and beyond guidance information, with 41% receiving incomplete or incorrect information. CFIB gave the agency a grade of D-. Agent professionalism, only 51% of completed calls were rated as good, 28% acceptable, 21% poor. That was the CFIB report, but what I find even more interesting is there's another report called the Serving Canadians Better report, which was actually retained by CRA. They hired Stan Tech Consulting to do a report on their call center service. That report said that 83% of respondents felt they had service that did not meet their needs. 71% of respondents felt they haven't yet reached their service improvement goal. Only 28% were confident in CRA's future direction, and some of the words they associated with CRA was slow, I'm sorry to say, incompetent, bureaucratic, difficult, inefficient, complicated, and frustrating. And that was from a report that CRA actually requisitioned for its own information. So my question, given this history of difficulties with the agency, is given the massive amount of resources and new programming required because of the crisis and dedicated to the COVID-19 response, and given these historical difficulties that I've talked about with the agency, how are Canadians to have confidence in CRA that, one, they'll receive timely and accurate information in this time of need, and that they'll, more importantly, receive their refunds and benefits, including the late coming wage subsidy, on a timely basis?
I don't know, we going to Mr. Vermette and somebody from CRA?
Yeah, it's Frank Vermont here. Happy to answer that question. I think you're right in that there's been a number of programs, a number of reports, and they've been quite critical of our call centers, and I think we've done a lot to try to respond to that. One of the challenges we've had in the past is one of technology, that we didn't have the technology to do some of the basic things that are needed to ensure high quality, and that issue has been resolved. We now have call recording and a centralized listening team, which allows our centralized listening team to listen to these recordings, find out where the information is inaccurate, and address those problems so that we've been able to provide better answers. And as a result, now we're consistently hitting a target of 88-90% in terms of accuracy, which is a significant improvement. So we feel very confident about that. I think but certainly call centers remain a challenge, particularly now. You've got extreme high volumes. We're dealing with the high volumes of the regular tax season that's going on. And on top of that, the challenges of the financial pressures that people are facing, calling us on that. And on top of that, of course, the new programs that have been launched. I'd say with respect to our ability to provide funding and refunds and do that accurately, I think we are doing a very good job. I think it's been mentioned that the GST credit, the additional amounts, significant additional amounts that were announced by the government, we delivered roughly a month ahead of schedule. Those payments went out on April 9th, and it was the single biggest payment in history in terms of Canadian government to provide those payments. We're providing the Canada Child Benefit enhancements. That will be delivered on schedule, probably slightly ahead of time, and everything is on track for that. I think the CERB, we were able to deliver exactly on schedule. We said it would take us approximately 3 weeks after the parameters were locked down. As a matter of fact, the parameters weren't locked down completely until shortly before the release, and we managed to do that. In addition to that, we've managed to adjust the program to reflect the latest changes to the program, for example, the $1,000 exemption of earnings. So I think we've responded quite well. Are we on track for the wage subsidy? I believe we are very much on track. Again, the legislation only passed a very short time ago, which did lock down the parameters. And even then, throughout that process, the very short process in which Parliament responded to very quickly, there were some changes made, and that required changes from our side. But we are certainly, I think, on track. We said 3 to 6 weeks was after the parameters were locked down. So we're certainly on track for that. And like I said previously, I think our plan is to launch the process in April.
Yep. We'll give you time for another question, Marty. Go ahead.
I appreciate that. And I did receive a response to my OPQ question, which did confirm that under your internal estimates, 12% of Canadians were getting incomplete and incorrect information still. But I want to point out that this is not the past, this is recent. These two reports, particularly the CFIB report came out in January, and the Serving Canadians Better report, which you retained Stantec Consulting for, was in November. But I just, do I have time for one other quick question, Mr. Chair? I wanted to turn to Ms. McDonald, if she's on the call still.
She is.
For finance. So a question I asked of the Governor of the Bank of Canada a few minutes ago, and he said I should be asking the Minister of Finance, so he's not here, so I'll ask you. My Premier in my home province of Manitoba, Premier Pallister, proposed this idea of having a central hub for lending. Provinces are borrowing now a lot in order to deal with this crisis as well. The idea would, and then I think every premier liked this idea, but for some reason didn't get past the Department of Finance. I'm wondering if the Department of Finance is open to Mr. Pallister's proposition of having the federal government coordinate lending so that provinces can have the benefit of the lower interest rates.
Susie, you're on. Ms. McDonald?
Yeah, I think while I'm responsible for FPT relations in the area of provincial lending, my colleagues in FSP also have something to do there. So I don't know if Soren has anything he wants to add, but what I can say is that we can bring that back and take a look at it within the department. I don't have an answer I can provide to you today on whether or not that's something we'll move forward with. Soren, I don't know if you have anything else on this file.
Hi, thanks, Susie. I guess maybe just to point out that the Bank of Canada now has facilities in place that serve the purpose of supporting funding markets for provinces. And it would appear that those facilities are in fact doing a very good job in that regard. And so what I believe we're seeing is that the spreads that provinces are looking at in funding markets are actually pretty reasonable at the moment, and they've come down quite considerably, and those funding markets are open for provinces to access as a general feature. And so,
the spreads that the provinces are paying would be larger than what the federal government is paying still. So I'm not sure what the reticence would be in doing this at this point in time, but maybe we can have another conversation about that sometime.
Yeah, I think the point's been made, Marty. Then turning to Mr. Fraser and then on to Mr. Cumming. Sean?
Thank you very much, Mr. Chair. I appreciate all of our witnesses taking the time to be with us, and more importantly, appreciate the work you've been sinking in over the last number of weeks. It's monumental, the effort that you've put together. I'd like to dig in a little bit on the notion that my colleague Mr. Julian's been raising in the last number of meetings around the proposed universal income of $2,000 per month. It's an intriguing idea. I agree with the principle that we don't want to see anyone left behind. But when I started thinking about it, I realized there's quite a few different holes. I've got a few questions that will hopefully let us examine this a little more closely. I'm curious, does anyone here sort of have the median household income in Canada? I don't mean to put you on the spot. I just we can get into it later. Perhaps I'll follow up. What I'm trying to figure out is how much is this program actually going to cost if you expended that? There's about 30 million adults in Canada. My sort of back of napkin math pegs the cost of this annually somewhere in the ballpark of $750 billion. Compared to what's the, I don't know, Mr. Marsland, if you'd have this on hand or if there's someone else better positioned, but I'm curious if anyone has the total spending of the federal government from last year handy.
Andrew, do you have it?
I don't have it. My sense is it's somewhere around 320 billion. But,
okay.
But I don't quote me on that.
Sure. No, I won't. I think if you're within a rounding error of even double digits here, I think it'll illustrate the point. I think what we're talking about is a program that could certainly more than double the total expenditures of the government of Canada when you look at everything we've spent money on, every program or project or income support. If we move forward with a path. And I wonder if it doesn't seem to be the most elegantly targeted model. When I look at, as the minister pointed out, there's a number of people on this call whose income has not been interrupted that don't necessarily need it. The point could be made that some of that income could be clawed back. But one of the things that I have sincere fear about is setting taxpayers up for a real surprise come tax time. Even if you want it to pull this back from individuals, let's say the median income is somewhere around $40,000 for an individual in Canada, I'd have real concerns about requiring people, even if it's only the 16-week period, from having to be surprised with a requirement that they pay back $8,000 come tax time. I'm curious if when we were just developing the CERB, if there was thought given to a basic income and how this particular kind of policy may be superior in terms of value for money.
Mr. Marsland, I believe we'll go to you. If others want to step in, raise your hand. Go ahead, Andrew.
Sure. Others may be better positioned to respond to that. I'm, after all, the tax guy, so that's
okay.
But let me kind of raise some considerations around that. I think the idea of a universal basic income has been around for a long time, and I think there have been debates around it, and one or two small pilot studies. I think the issue is really one around balancing the replacement of supports in place now through provincial efforts, through the employment insurance system, and so on, with the system that replaces all of those. And I think the questions that one has are around affordability, around labor market effects, and so on. We didn't get into those discussions in designing the Canada Emergency Response Benefit. I mean, really, the question there was how to support Canadians in as fast a way as possible, in a simple way, in a way that was responsive to the extraordinary situation at hand.
Can I just dig in on that speed issue for a moment, Mr. Marsland? One of the things that I think may be a common misconception is I've been to the finance department's offices a number of times. I've never seen a send money now button, and I worry that we don't necessarily have a database that gives access to a direct deposit in Canadians' accounts, or necessarily a home address that we could just send a check to. Is it your view, given the statement you just made, that the CERB is the most, from a time savings point of view, is the quickest delivery method that would have actually gotten money into the hands of people that was available, save and except the pre-existing mechanisms like the GST rebate or Canada Child Benefit enhancements?
Well, in fact, you know, and Mr. Vermaten is better positioned to speak to this, but essentially we use the system, the benefit system, at CRA, together with Service Canada's system. We use those systems that were already in place to effectively, on the basis of attestation, on the basis of information that was already on file in terms of direct deposit and so on, to deliver it as quickly as possible. I can't, if there is a faster system, I can't imagine what that is.
Okay, we will have to, unless Mr. Vermaten has something to add, we will move on to Mr. Cumming and then Mr. McLeod. I might point out, Jonathan Wallace, you have a nice cat that jumps across your desk there every once in a while. Go ahead, Mr. Cumming. James, try your mute button must be on.
No, it's not on.
There, it's on. You're okay now.
Okay. All right. Thank you. And thank you to the witnesses for appearing. No cats on my desk here. So, but I wanted to start out by, I'm going to save, I know how busy all of you are. I'm going to save the Department of Employment Policy, Skills and Employment some work. You do not need to study employment patterns right now. Businesses are closed, people are looking for income, and you're flooded with applications. So the issue is, let's get people back to work. I want to focus my questions towards the Department of Finance and related to CEBA. And we've had, I'd like to know if you have any statistics on how many applications have been rejected and what they've been rejected for.
Can anyone come in on that? Go ahead, Soren.
Thank you. So we have some preliminary information coming in from the financial institutions. And I just want to put in parenthesis here that this program was launched last Thursday. And so, you know, we are now at day 5, I suppose, in terms of the window having been open for the program. And so we've had conversations with the financial institutions about what they're seeing in this regard. What we've heard is that the percentage overall is not very high in terms of those that are getting rejected. If I was going to put a number to it, it would be something below 10%. In part, I think it reflects the simplicity of the selection criteria. Why are they getting rejected? About half of them are getting rejected because of fraud, and so there may be a flag against the party that is seeking an application, and that causes it to be rejected. Others may not have met other parameters that are part of the application, and so it is an area where we are going to drill in and make sure that we understand as best we can.
So, given the parameters have now changed, which I think is a good move, if someone's been rejected based upon the new that they didn't fit under the old parameters and the new parameters have been changed, will you be going back to those applicants? What will be the process for that?
So again, this is a program that's run through the financial institutions at the front end. In our conversations with those institutions today, I think what we're hearing is that they will communicate out broadly to their business clients. And so there will be no shortage of information, including outreach from the banks and other financial institutions that this is available, so that those who perhaps had taken a first look and found themselves not eligible are able to once again go in and reapply.
So on another issue that I've heard from thousands of businesses on as it relates to source of income. So T4 income is a problem for some smaller operations where they're taking dividend income. There's issues with, I've heard from chiropractors who are independent contractors. There's a variety of things that are in today's modern world that is employment income. Is there any reason why the department wouldn't look at those either independent contractors or dividend income under both the CEBA program and the wage subsidy program?
I'm going to make a couple of comments. They're maybe not going to answer your question directly, but just to give you a little bit of context. The first comment is that the purpose of the CEBA program is to meet non-deferrable costs that a small business might have, and so it fits into a scheme of other programs that the government has available, and that includes the other credit programs that are offered by BDC and EDC. It also includes the CERB, which would be available, for example, to a sole proprietor. And so, it's part of a broader frame of programs. When it comes to this specific program, we were looking for criteria that could be adjudicated rapidly, as Andrew suggested in terms of other programs that have been put up. Here, we needed very simple criteria that could allow the program to be deployed quickly, to be scaled very, very rapidly, and also that would provide an indication of the physical platform that a business has. And so the operating idea here is to get at those businesses that are actually going to have costs, and that it's a place where those costs aren't otherwise met through other forms of support the government has.
So
you get enough clarity on that, James?
Just want to go back to, so how difficult would it be to recognize dividend income as employment income on a temporary basis? Because this is what we're really talking about. There's thousands of businesses that don't operate with the idea of T4ing as a small business.
So what I would say on that is that it would add complexity to the process, and really simplicity was one of the primary factors that allowed us to move quickly. And so it would cause us to need procedurally to introduce other tests. And right now we are where we are, having opened a program that is making credit available to something in excess of a million small businesses in Canada, because we were able to do things in a simple and streamlined way.
Okay, well, I'd end it there. Thank you both. Turning to you, Michael McLeod, and then on to Mr. Polyev. Are you there, Michael?
Yeah, thank you, Mr. Chairman.
Go ahead.
I wanted to say, first of all, that the North was very glad to see the package of support that was announced earlier this week. It was specific to health, transportation, and business supports. I've heard quite a bit of feedback from the Chambers of Commerce and the Chambers of Mines in my riding, as well as the Northern senators who have expressed some concerns with the flexibility of some of the programs, like the wage subsidy. I'd like to ask if somebody there could talk about the response to assist the territories, and if the government's able to talk a little bit about further steps to address our unique needs. And the second question is, we've been waiting, the government of Northwest Territories has been waiting quite a while now for a response to increase the borrowing limit. That limit is set by the federal government. It's kind of tying the government of Northwest Territories' hands to do a number of initiatives. I'm just wondering if somebody could respond to those two issues.
I would expect it's Mr. Marsland, but I'm not sure. Can anybody go to that one?
Yeah, it's Susie.
Go ahead, Susie.
Yeah. So on the issue of territorial borrowing limits, thank you for raising it. We certainly understand the situation of the North and the specific needs there. There have been, I think I maybe mentioned this last time, a number of conversations around borrowing limits. We continue to look at the issue. With regard to recent support for the North, indeed, we announced $72.6 million for the governments of Yukon, Northwest Territories, Nunavut. And that's to support health and social services, certainly in response to the current crisis. We looked at providing an additional $17.3 million to territorial governments on northern carriers. And my colleague Evelyn might have more she'd like to add on that. 15 million of existing resources were made available through the Canadian Northern Economic Development Agency, CanNor, to provide non-repayable support to businesses in the territories to help address the impacts of COVID-19. Again, understanding the particular needs of the North and what could happen there. And then, of course, $25 million to Nutrition North Canada to increase subsidies to families so that families can afford nutritious food and personal hygiene products. And we also expanded that program so that it included a wider range of things that could be covered, including personal hygiene, but also cleaning products to make those more affordable to people in the North. And of course, as you know, through the territorial funding formula, the North receives a fair amount of money from the federal government on a regular basis. And that money goes towards a wide range of needs. I don't know if you wanted additional information on those announcements.
Michael, do you have another question?
Okay, yeah, I was looking for some of the feedback that I'm getting that I'll bring it forward, but we're looking for some flexibility on some of the programs that are existing that have been announced. My final question is regarding the airlines. We have some serious concerns. We have 22 communities that are fly-in only, and we have a number of airlines, especially on the Beaufort Sea and the coast, that are talking about not being able to operate and may shut down entirely. If that happens, there is no service that is be able to go in there unless there's a charter service from the south or we get the military. Is there a backup plan in the event we have some communities in Canada that could become totally isolated? What do we do?
Ms. McDonald, do you want to take that one, or is it a point of information to take up the line?
No, my colleague Evelyn can respond, I think.
Okay, go ahead.
Certainly. Well, as shown by this week's, earlier this week, the announcement of the $17.3 million in respect of Northern Airlines and airline support, the government is following very closely, and it's my colleagues at Transport Canada, as well as ISC, following these developments and these impacts of COVID-19 very closely in respect of what it means for essential services, including transportation services in the north and for remote communities. And so the discussions with airlines are extensive and frequent, both through those two departments, as well as the eligibility of those businesses under the special programming available through the Financial Crown Corporations. There are various windows open. And very sustained dialogue and ongoing assessment taking place. So this concept of essential services and the vulnerability of certain communities is very, very much on the government's radar. And I would presume that there would be an ability to stand ready to support, as we saw this week.
Okay, thank you all. Thank you, Mr. McLeod, and those who answered. I do have Mr. Polyev on my list next. I don't see him. Are you there, Pierre?
I'm going to...
okay, Mr. Cooper, go ahead.
Over Michael Cooper.
Yeah, thank you. I think Pierre has some issues with his phone, so I'll take his time. Thank you for that. I will direct my questions to the finance officials, and I want to follow up on an issue that I have been raising over the last couple of meetings, and that is with respect to credit unions. I know that there is an expedited process in place to get credit unions on board in terms of being able to provide CEBA to their clients. However, last week it was stated that there was an anticipated timeline of by the end of the weekend that a number of credit unions would be on board. I looked at the EDC list of approved lenders today, and I don't see that that list has been expanded. So I was wondering if any of the officials could provide an update in that regard. It's a critical issue because right now in Alberta, literally 40,000 small businesses are shut out.
So it's Soren Halverson from Finance. I can take that question.
Thank you.
So what I can tell you is that EDC has a list of financial institutions that are participating in delivering the CEBA. Today, there are 43 institutions on that list. That list is growing every day.
Sorry, okay, that clarifies that. I went on to the website and it looked to me like that list had not expanded, or at least it didn't appear, at least with respect to credit unions. Am I mistaken?
I think perhaps there are... And I should, well, let me speculate. There is a list on the EDC website that has to do with their export guarantee program. That is not necessarily, it isn't the same list as the list of eligible institutions for the CEBA. With respect to CEBA, there's a list, and just from Alberta, Service, for example, would be on that list. Connect First would be on that list. Okay. In addition to that, there's a two-pronged approach that EDC is taking. They are, first of all, They're working literally around the clock to add additional credit unions onto the list one by one. But the other thing that they're doing is they're now working with the centrals, and that includes the Alberta Central, to essentially get everybody that is a credit union in those particular provinces.
Good. I appreciate that update, and I guess I didn't see the complete up-to-date list. I was looking at an old list, so thank you for that clarification. I don't have a question, but I do want to put on the record in terms of CEBA and in terms of the wage subsidy, the gap, the serious gaps that exist, by providing some examples of businesses that have been shut out in my riding. For example, one business owner who has no employees. They work 12 to 15 hours a day in their business with the help of their spouse and kids. In 2019, on the advice of their accountant, they decided to take a dividend rather than a salary. They're shut out of CEBA. They're shut out of the wage subsidy. Another business owner in my riding, they set up a startup tech company. For the last 2 years, they've been working hard to build up their business. They haven't taken any salary or income out of the business. They haven't paid themselves at all because they have chosen to keep the money in the company to grow. And frankly, right now they're being penalized for working to grow their business, shut out of CEBA and shut out of a wage subsidy. So I appreciate that the government and officials are working in an unprecedented time as speedily as possible, but there are many, many practical examples that I'm hearing in my riding, and as is the case across Canada, where small businesses are not getting the supports that they need, and it's making the difference between whether they can survive or stay afloat. So I hope the government will take that and move as speedily as possible to rectify some of these gaps. Thank you, Mr. Chair.
Okay, thank you, Michael. I don't know if anybody wants to answer, or if that's just a point to take back. I will go to, if not, I'll go to Mr. Fragiskatis, and Ms. Goudreau. We'll have time for one question for you as well. So, Mr. Fragiskatis.
Thank you, Mr. Chair, and thank you to officials for all the work they've obviously been doing tirelessly on behalf of Canadians. It's actually a very specific question. I'm asking on behalf of a constituent organization, but there's a number of health-based research institutes throughout Canada as well. We've seen the importance of health research throughout this process, throughout this experience, rather, of COVID-19. Health-based research happens certainly on university campuses, but it also happens at hospitals. The question that I've been asked by hospital-based health research institutes, certainly the one in London, and that's Lawson, and a huge shout out to them. The Lawson Health Research Institute is doing incredible work and always has. But the question that they've put, and as I say, others have put as well, is if they're registered as a not-for-profit, are they eligible for the Canada wage subsidy and other supports?
Who wants to take it, folks?
So perhaps I'll begin with the rules. I don't want to give a kind of ruling with respect to any institution.
No, and I should clarify. I don't want to put you in that position, Mr. Marsland, but I'm just seeking clarification, just so I can communicate to them.
So the non-profit organizations and registered charities are eligible for the wage subsidy. Hospitals are not.
Okay, they are hospital-based, but they are registered. What happens when a health research institute that's based at a hospital is registered as a not-for-profit? Are they, in that case, counted as a not-for-profit and therefore eligible for the Canada wage subsidy? And in addition, perhaps even the Canada Emergency Business Account, since it is open to not-for-profits.
So I think I prefer if the organization could either contact the Department of Finance or CRA, and we could look at the particular structure. As I say, the basic construct of the rule is that that a hospital wouldn't be eligible, but a non-profit organization would be.
Yeah.
So it's one of these. It's very fact dependent, and I would hesitate to express a view on a particular organization.
No, it is.
We'd be happy to engage with the organization.
It's a unique situation because obviously hospitals are not eligible, but they're based at a hospital and registered as a not-for-profit. So do their work, carry out their work through donations and the like on the part of the community. In any case, I know it's a very
so we'd be
question,
happy to look at a particular circumstance.
Yeah. Well, I'm with officials, and I thought I would put it. It would be a good opportunity, and I'll certainly pass. I know the organization has reached out, and I'll continue to engage with them and liaise between the Department of Finance so we can get them an answer. Mr. Chair, I still have time, I take it?
Yeah, you got time for one more question, and then we'll go to Marie-Helen.
Okay.
Go ahead.
Sure, no problem. It was raised earlier by my colleague, Mr. Fraser, the whole idea of universal basic income. So the economist Kevin Milligan has said the following, that if we did proceed to put in place a basic income in response to COVID-19, the total cost would have been $240 billion for 4 months. The math is pretty simple. $2,000 per person, per adult rather, for 4 months leads to $8,000 per adult. You multiply that by 30, and we end up with $240 billion as a direct support. Has there been an analysis done on whether or not, if we had proceeded in that direction, whether or not there would have been enough left over to introduce all the other measures that we have seen to support businesses and to support Canadians? What would that have done to our balance sheet if indeed we did proceed down the path that the NDP and some others have called for?
So perhaps, Mr. Chair, I can respond to that.
Okay, go ahead.
So I can't fault the math. It sounds right to me in terms of $240 billion. That is a significant expenditure when our revenues are somewhere in the region of $300 billion a year. I think what the government did is it's as the minister indicated, it tried to quickly make funds available to those who are in need, and did so in a very streamlined way to ensure that all people who had lost their income because of COVID-19 were able to source emergency benefit.
Okay, we will have to end it there. I'll give the last question to Ms. Goudreau, and then we'll have to wrap it up. Marie-Helen, go ahead.
Merci. Thank you very much. I'll be very brief. I have 2 questions that concern many people because we have to respect social distancing for quite some time still. Do we think that there could be a delay in tax returns? A lot of people tell me, can we extend this even further? My other question is very simple. When can we get the details about the commercial rent assistance? In my riding, for example, there's a large tourism sector. Thank you very much.
To CRA for the tax returns, and then to someone else. Go ahead.
Frank Vermont here. I'm sorry, I didn't hear the question. My volume wasn't working. What was the question on tax returns? Could you please repeat it?
Go ahead, Marie-Helen. Oops, I can't hear you either.
Oui. Pouvons-nous? Could we think about delaying additionally the filing of the tax returns?
Delaying additionally the tax returns.
Yeah, I did. So thank you for the question. Well, right now we have delayed the filing deadline to June 1st and the payment until August. So we think we've made a significant accommodation. The reason why we're reluctant to push the filing date past June 1st is because the information we receive from taxpayers is important for calculating benefits. So, for example, the information we receive is used for the Canada Child Benefit calculation, the GSTC calculation, and we provide that information to other departments such as ESDC for the delivery of old age security and guaranteed income supplement. So we really are reluctant to shift out the date even further so that we wouldn't have up-to-date information to provide for all these really important programs.
And, anyone answer the questions on rental assistance? I think it's a discussion in the middle. Go ahead, Soren.
So just perhaps a two-part answer. The first is, the minister, I think, was pretty clear. He wasn't ready at this point in time to communicate beyond what had been communicated. So I don't know that we can provide precision beyond what you've heard from him. And then having said that, I would just point your constituents towards the availability of other credit measures, which include the Canada Emergency Business Account, as well as the credit that is available from ABC and BDC, because all of those things are there to deal with non-deferrable expenses that businesses have, and that includes rent. And so that's a very valid use of those programs.
Okay, with that, I want to thank all the members and certainly thank officials for sticking with us a little over time, and also the technicians who make this system work. It's our first attempt at it, and we appreciate everyone's effort very much. So thank you, officials, for all the work you've done in terms of trying to roll out these programs and put them together, as I say, at warp speed. We appreciate that very much, and we appreciate the ideas coming forward from members. So with that, we will adjourn, and we will see everyone on the committee tomorrow again at 2 Ottawa time. Meeting adjourned. Thank you muchly.